is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo with us. Yes, we're going to do newspapers. And yes, Lisa insisted we're going to talk about Taylor Swift's outfit at the Kansas City Chiefs football game. We'll get to that in a moment. Speaking of it, dressed in red, supporting the Kansas City Chiefs, Paul Sweeney on assignment. We'll talk about it. Jessica Menton joins us this morning here in studio. What did you think of yesterday, Jess Menton?
Well, I mean, looking at what happened to NVIDIA, especially the route we saw, as much of it that it lost $589 billion. So it's the worst route in market losses that we saw when it comes to market cap in history. But maybe a turnaround Tuesday here, Tom.
It is turnaround Tuesday. We got some green in the screen. The Dow Futures flat, but there's a little bit of a sprightliness. And the key message, folks, this morning is it's a correlated sprightliness. The first thing I did, I looked at the Bloomberg Dollar Index, and you know what? It's got a lift to it. We're not through certain technical patterns, but hey, we'll take anything after what we observed yesterday. Throughout the entire show, we will honor and glorify Mandeep Singh. He killed it yesterday.
He really did.
He's on 3 times, plus all the other shows. Thank you to the people that handle you people. Like, if we want to get Jess Menton, folks, we have to go through like 6 people to get to her. Same with Mandeep. It was really, really great.
Fabulous.
Yesterday. We said good morning to all of you on your commute across the nation on YouTube. Subscribe to Bloomberg Podcasts. Bloomberg Surveillance, brought to you by BAM Mutual, BAM Mutual. BAM Mutual, they insure municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. And I'm thrilled to announce that Alex Steele and Paul Sweeney will join BAM Mutual downtown. They'll do that in the 10 o'clock hour. I think Alex is taking the Sikorsky to avoid the congestion tax. She lands on the
I believe that.
top of the building, something like that. Let's get started now from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, we've got futures kind of rebounding. This is after the news of that cheaper AI model from China's DeepSeek sent stocks really plummeting yesterday. NVIDIA sank 17%. We heard about that this morning. Shares on the mend up about 4%. Also on the rise, you have Broadcom up 3%, Marvell Technology up 4%, and even Constellation Energy, which helps power AI's data centers, is up 3% after yesterday's 21% wipeout. So we'll start with NASDAQ futures. They're up about 0.2%, 54 points. We have S&P futures up 0.1%, 7 points. Dow futures, though, little change, down about 37. The 2-year yield, 4.22%, and that's up 2 basis points. The yield on the 10-year, 4.56%, and that's up 3 basis points. Want to go to currencies? The dollar strengthening against its peers. President Trump's promises much bigger tariffs. That's the reason for that. So we have the Bloomberg Dollar Spot Index up about 0.4%, but you have the Japanese yen, euro, British pound weaker this morning. We also have earnings coming in fast and furious. We'll start with Boeing. Their shares up 0.5%. Fourth quarter adjusted free cash flow, $4.1 billion. We'll continue to bring you more information on this as it comes in. And I want to point out shares of General Motors up 1%. 2025 adjusted EPS forecast beat estimates. There are more coming in, as well as Starbucks after the close. So we have a lot in store. That's a Bloomberg Business Flash. Over to you.
Yeah, you go on the Bloomberg. Jess Menton knows this. Also, Lisa Mateo driving this forward is NI space ERN. And it's just a wall of information. I don't know how you sift through it. JetBlue just out with their average fuel price. They're not buying their fuel at Wawa, but JetBlue out. We'll get to that in a moment. Patrick Armstrong to be with us in a bit, but we start strong with Seema Shah, Chief Global Strategist, Principal Asset Management. We're going to try to talk to her without mentioning DeepSeek and all the rest of it. Seema, when you see a shock like we saw yesterday, for measured conservative 3-year time span, do you buy the dip? Do you take a long lunch? What do you do?
Hi, Tom. Yeah, look, yesterday was a tough day. Mainly because there's so much uncertainty. I mean, there's something that I think is we've had time to digest the impact, which makes it a little bit easier for investors. But I think, given that the jury is still out, it is a big question. We've had so much money go into money market funds in the last, will continue to go into money market funds over the last couple of months. And when we speak to people, the thing that they keep saying, or have been keep saying, is that they're really concerned about equity valuations. Is this really the time to go in, particularly when they look at tech valuations and they say, look, they're really, really frothy. So after today, is it a buying opportunity for Mag 7, or do they, kind of keep a step back? And I think that the uncertainty still keeps them on the sidelines with regards to big tech, but it probably does improve the outlook for, a broadening of that investment space. So I think you're going to see people come back in, seeing that the productivity gains for the US economy for a number of US sectors and globally, of course, that there are other opportunities. So I think it's almost like a pivot into different areas of the market, which actually should be healthier.
I look, Seema, at all this, and I look at people in money market funds, and the surveillance exuberant meter isn't ringing a bell. Are we exuberant now into this Fed meeting, or is there a leadenness to desire to own equities?
I would say that there's not that much exuberance, mainly because there's so much uncertainty. I think everyone is in agreement that, look, the economy is looking pretty robust. The prospects of recession are very, very far out, which should mean good earnings growth for 2025. But I think that when you have so much uncertainty, firstly with the tariffs, what's going to happen with the fiscal space, and now, of course, with DeepSeek, it's a difficult time, I think, for investors to really put that exuberance to use, even if the macro backdrop is very constructive.
Speaking of buying the dip, Vanda Research put out some data on retail investors specifically, and they bought a record amount of NVIDIA stock during the sell-off that we did see on Monday. So, Seema, when you're speaking with your clients, how are you advising them to position?
So what we're saying is that this is a time when you really do emphasize not just global diversification, but diversification across sectors. There has been so much FOMO over the last couple of years. Investors who really didn't get into the Mag 7 have been waiting there. And so, if they've had anything, they've put that money to work in big tech. Now, I think this really does accelerate the point that global diversification is key. Valuations, maybe a lot of across the space in some places still look expensive, but that's not a reason to avoid them. So places like India, Japan, we continue to like. And then, of course, there have been some tactical opportunities in Europe and, of course, China now. So I think that's key, but also looking beyond the big tech. So sectors within the financial space, particularly, we think are looking strong, and potentially within industrials, if you do start to see this manufacturing kind of green shoots start to take off. So I think that's what we're advising investors. This isn't the time to sit back and cash, but you start to recognize that there are opportunities outside the spaces that everyone's been very much limited to over the last few years.
There's been so much criticism over the past 2 years in this bull run about broadening rally. If you look at the SPW, the equal weight index for the S&P 500 was up just marginally yesterday compared to 1.5% drop in the S&P 500. And then, of course, another strong breadth day with 57% of the New York Stock Exchange higher trading there. So when you're thinking about the broadening type rally, where do you see as far as when it comes to earnings growth and how that could translate to stock performance over the next year?
Yeah, and I would say that the fact that broadening of the rally, which has been spoken about so much over the last couple of years, hasn't really taken off, has just added to this kind of idea that actually, look, the only thing to do is the big tech. So I think that it hasn't helped, but we do think this is going to be a fairly good year. So in terms of spaces, one of our favorites continues to be financials. From a macro space, of course, you've got a strong economy, you've got a positive yield curve. Just so from a fundamental perspective, financials do look good. And then you add in the deregulation that we're expecting to come through in 2025. But it looks like quite a resounding case for financials at this point.
Seema, I got to be quick. What kind of financials are the attraction that you see out there? I mean, is it like load the boat on JP Morgan, or is it big banks? Is it regionals? Am I buying Paris? What am I doing?
So we think the US big banks are still good buys. I know, look, they're expensive, but of course we've never seen over the few years. Expensive doesn't mean that there's going to be a correction. We also actually like some of the European banking space, fundamentally not as strong, but actually have been very much unliked, and from a valuation perspective, looking pretty interesting.
Okay, Seema, thank you so much. Greatly appreciated today. Seema Shah with Principal Asset Management. We are thrilled to bring you now, worldwide, Patrick Armstrong. He's with Plurimi Wealth. Just wonderful efforts, writes in the FT beautifully on a cross-asset perspective. What's your number one research focus now, Patrick Armstrong, after the debacle yesterday? What is the topic, the theme, the study for Patrick Armstrong?
Well, we spent a lot of time looking at NVIDIA's profitability, and we think unequivocally what's happened is you do have to discount future profitability. I think NVIDIA is an incredible company. It's going to maintain very strong profit margins, but the really unprecedented profit margins it's been generating and that we were forecasting out for the next 24 months, I think you start to have to dial that back a little bit. So we still own NVIDIA. We were selling put options on NVIDIA yesterday with March 110s. We get a 6.5% return over 2 months, as long as NVIDIA doesn't fall below 110 on that. And it's a great company. It's a bit cheaper than it was, but the multiple contraction that happened yesterday is also justified by there are going to be competition to NVIDIA. There's going to be cheaper ways to do it, less intensive ways to do it.
Patrick, you published the Plurimi AI short equity strategy. Folks, don't get it from Jess Manton. We protect the copyright of all of our guests. Get it from Plurimi, Plurimi. But tell me about an AI short equity strategy. What is it, short Microsoft?
We actually had we use AI to help us select stocks. We don't short stocks that are in AI there. So we've got a stock selection system that uses machine learning that identifies winning.
Okay, so what's it tell you right now?
So we're actually short some of the winners of yesterday. So we had an incredible year last year where we're short Nestle, we're short Kering, we're short Boeing, we're short Rivian. So companies that have low growth and extended multiples or have no path to profitability, those are the kind of companies we're short. And Staples had a really good day yesterday. But the machine does react to what happens in markets. So turning points in markets where you see a rotation from the mega cap, it does take several days, and sometimes it does change its mind. But right now, we're really short expensive companies that have low growth. We do own 4 of the Magnificent 7 that we think are trading at pretty reasonable multiples. And we are overweight value versus growth on the rest of the portfolio.
Jess, I can't say enough about how cool it is that Patrick publishes a short equity note. Most people just talk it and they don't write it. And it's nice that they write it. I suggest a Metten tour de force, 4 screens on the Bloomberg terminal.
I agree with that. Something I wanted to also point out, because Tom and I were talking about Apple last week as it was getting closer to testing that 200-day moving average, but yesterday up more than 3% as you saw a sea of red. How do you view when it comes to other stocks like Apple that might not be as exposed to AI and might benefit from other things that have been happening compared to yesterday?
Yeah, so we don't own Apple. It's an expensive company that's not got the same kind of growth as NVIDIA. Even if you do deteriorate, the growth outlook for NVIDIA may deteriorate. Apple is really growing by buying back its shares. And I don't mind paying a 30-time multiple for a company that has exceptional growth. Excuse me. Apple is a great company, great profit margins, and moderate growth is how we view it. So it's not a company that I want to short by any means, but it's not a company I want to pay those multiples for either. So I own Google, I own Amazon, I own Meta, NVIDIA. Those are the companies that I'm comfortable with the multiples. They are buying back shares like Apple, but they're getting better top line growth.
And of course, as you know, we'll have Meta earnings later this week, as well as Microsoft, Tesla, and of course, Apple after the bell on Thursday. When it comes to the tech cohort as a whole, because their earnings growth year over year, it's supposed to be a little over 20%. But of course, there are those base effects because they're not going to be as dramatic as, say, when we were in the bear market in 2022 compared to what their earnings growth was in 2023 and obviously 2024. But how much of this is base effects versus how much of this is slowing growth related to AI?
It's exactly those two things. I think you summed it up, and it's probably equal weighted between the two. The earnings growth is going to come because there's a big cyclical element in these companies as well, which sometimes is bad news. But in our base case, we're in a no-landing scenario in the U.S. economy. Consumption is going to remain strong, so we think that fuels advertising revenues for these big companies as well. The base effects matter, but these companies will grow faster than the market. We do think their multiples contract, whereas the broad market multiples pretty much stay flat. So net, you're going to end up with a positive
Right.
return on the mega cap stocks, but you're also going to see a catch up on the lower earnings, but no multiple contraction on the S&P
Right.
493.
Patrick, I'm sure you're getting this, particularly with your work with the Financial Times. Is the United Kingdom cheap? Is it a value trap or is it an opportunity?
You got to go case by case, stock by stock there. So there's some companies we really like. The UK is cheap versus the US. It's a little bit cheap versus its own history, but it's not banging the table cheap bull market scenario, in my opinion. US is where the growth is. UK is a little bit better than stagnation. It's got more issues than the US on the growth side of things. It's got a tighter budget from the government. We think the US consumer drives consumption and the US government continues to run big deficits. We think the UK government isn't able to really push fiscal thrust.
So on an active, you define active, Patrick, but are you more diversified or more concentrated entering 2025?
We're in a funny position that I run really concentrated portfolios, 30 stocks long, 30 stocks short.
Love it.
But the perversity of where the benchmark got to is the MSCI World that has 2,300 companies is more concentrated than my portfolios that have only 30 stocks.
How is that? Explain that.
So 2,700 companies in the MSCI World, and the top 7 of them account for, I think it's 14%. So there's very big weights in the Magnificent 7. And whereas I hold 4% in NVIDIA, 1 out of 30 stocks, the MSCI World has the exact same weight as me in NVIDIA, even though it's got thousands of stocks. So it's a really concentrated index. I'm running a concentrated strategy, but the top part of my strategy isn't more concentrated than the index.
Beautifully explained. Patrick Armstrong, thank you so much. And Seema Shah as well. Thank you, both of you, for getting us started this morning. Mr. Armstrong is Plurimi Wealth. You can look for a short equity publication. Get that only from Plurimi Wealth Management. Red and green on the screen right now. Futures up 5. A nice rebound, but I don't want to sell it as too much. The VIX, 18.08. We were 21. OMG, we're all going to die yesterday. Michael Barr was on the phone to his broker.
And I told my bookie, Benny, look, you better do this.
The First National Bank of Barry Sanders, and he said, go to cash, go to cash, go to cash. And, we were 21 there, which is not hysterical, frankly. 30's hysterical. 21, and we've come in 21 to a more quiescent 18.11 right now. Again, red and green on the screen. Yields recover here. Lower yesterday, correlated, and they're a little bit higher today. The 10-year real yield comes back up. It's a little more less fearful, 2.16%. With our news in New York City, Michael Barr.
Thank you very much, Tom, Jess, Lisa. President Donald Trump has signed a flurry of executive orders focused on the military. One directs Defense Secretary Pete Hegseth to revise the Pentagon's policy on transgender troops, likely setting in motion a future ban on their military service. Other orders would roll back diversity programs, create a space-based missile defense system, and reinstate troops booted for refusing COVID-19 vaccines. Trump is also asking Congress to pass an all-encompassing reconciliation bill.
I'm looking forward to working with Congress on a reconciliation bill that financially takes care of our plans to totally and permanently restore the sovereign borders of the United States once and for all.
President Trump spoke at the House Republican Members Conference dinner at his Doral International Club in Florida. The Senate has confirmed President Donald Trump's Treasury Secretary nominee, billionaire investor Scott Bessent, had bipartisan support.
The yeas are 68. The nays are 29. The confirmation is confirmed. Under the previous order, the motions to reconsider is considered made and laid upon the table, and the president will be immediately notified of the Senate's action.
Bessent will work to extend tax cuts passed in the first Trump administration. Bessent is the first openly gay individual to hold the role. He supported Democrats in the past, but now supports President Trump. It's sending shockwaves through the defense industry. Two people familiar with the pause say that the new Defense Secretary, Pete Hegseth, is holding all new Army contract awards as well as solicitations for new programs. According to two people and an email reviewed by Bloomberg, the pause could last as little as 10 days, but could potentially continue for months. The hold comes in part to review diversity, equity, and inclusion clauses in contracting. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg Tom, Jess, Lisa.
Michael Barr, thanks so much. Mark Cudmore out with a nice note on MLive, which is the internal. If you have the Bloomberg terminal, you get the joy of reading Mark Cudmore. And the basic idea here, and this is in the zeitgeist just mentioned, is all we know about yesterday is it means better efficiency, better productivity. Paul Donovan, thank you, Paul, for being with us yesterday at UBS. But it means just everything is cheaper and better. And I guess it comes down to Apple.
That's right. And we're
Am I right?
Of course it is. And especially when it comes to those M4 chips related to AI processing that more people want to hear about on their earnings call.
But I have my AI on the phone.
Right.
And because it's on my phone, I choose my AI.
Correct.
Lisa, are you going to have AI in your phone?
I have ChatGPT.
Oh, you have ChatGPT? You're one up on me?
I don't have DeepSeek, though.
I don't have that. I'm learning every day. Lisa Mateo, way ahead of me on the AI. We've got some great guests coming up on foreign exchange. Derek Halpenny coming up as well. Right now, red and green on the screen. Stay with us on YouTube. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got futures on the mend after yesterday's tech-fueled sell-off. The Nasdaq fell more than 3%. The S&P 500 slid 1.5%. But here's something interesting. Rising stocks in that benchmark, well, it far outnumbered the declining ones, 350 to 152. So let's start with Nasdaq futures, up about 0.1%, 33 points. We'll go to S&P futures, little changed, up about 4. Dow futures, little change, down about 41. We have the 2-year yield at 4.21%, up 1 basis point. The yield on the 10-year, 4.56%, and that's up 2 basis points. Want to head over to commodities very quickly. Brent crude $77 a barrel. WTI crude $73 a barrel. On the economic calendar for today, we have a read on consumer confidence and durable goods. But the week also brings, yes, the Federal Reserve's first policy meeting of 2025 and also the Commerce Department data on GDP. Let's take you to earnings. We have higher volume. That's helping boost results for Kimberly-Clark. But shares of the maker Scott toilet paper, well, they're down. They're down about 1%. And we go to travel. Reported fourth quarter earnings were better than Wall Street expected for JetBlue. Demand kind of climbed after the November election and during the winter holidays. Fuel prices fell. Its share, though, down about 3%. And Royal Caribbean, their shares up this morning, higher up 4%. Forecast adjusted earnings per share for 2025 topped estimates. But here's the thing. It said its busiest booking period is off to a record start. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That's a Bloomberg Business Flash. Jess and Tom.
Thanks so much, Lisa, and thanks for just killing it on the earnings cycle. We got to do this, folks. Here's the strategic Bloomberg surveillance equity approach. Apple, NVIDIA, some other stock we don't know, more Apple, more NVIDIA, Microsoft, more Apple. Did we do NVIDIA? Let's do NVIDIA again. Jess Metton with me today. Jess, Kimberly-Clark, KMB, Lisa mentions it.
Yes.
Their 10-year return is 5.5% per year, and they're trading at a multiple that harkens back to my first gray hair. They're trading at a 12 multiple, trailing.
You know, it's interesting. I was talking to Tom Barkin last year about how he was viewing consumer packaged good companies, especially when you're thinking about a company like Kimberly-Clark.
Where's the growth?
Right, exactly. And he looks at the volume price to mix ratio, but he was looking at it more so on the inflation type front and what that meant as far as corporate America and how that feeds into some of the models the Fed has. But when you look at some of the other metrics, like you're pointing out, it's tough there.
What is management doing in a company like that with low single-digit growth? Michael, I'd say to Mike Sue, the chairman and CEO of Kimberly, are you blowing up the company? Is there any urgency?
Right, and especially when you're thinking about just relative how that group has performed to the S&P 500, massively underperforming.
I know. Derek Halpenny's taking notes in London. Joining us now is Derek Halpenny on foreign exchange. It's been way too long since we've had him on. He's just done a great job at MUFG for decades. Derek, let's go right to the dollar with the tests that are going on. Is it dollar resilience that you observe?
Well, when you consider the level of expectations that were surrounding Inauguration Day and Day One tariffs being implemented, yes, I think the correction weaker when you consider the scale of dollar strength in Q4 of last year, I think is still pretty moderate. And for obvious reasons. You know, I think you'd be a brave man to be selling the dollar here when you listened to Trump last night and the way he was talking about trade tariffs and how he loves them and all the advantages. Tariffs are coming. It's just a matter of when.
Right. You are expert at flows. What are the flows from the continent to America, vice versa, or from the Pacific Rim to America?
Well, speaking from an MUFG perspective, the Pacific Rim, to Japan, and both, Japan to the United States from the Pacific Rim, and also in Europe, there's definitely been reduced appetite for fixed income investments, and I think in that it partly reflects the increased cost of hedging for Japanese investors has curtailed their appetite because, as you know, Tom, there's an appetite for fixed income, but also hedging that to some degree. And the cost of hedging, I think, has brought down overall the buying of fixed income in the United States. And it's even more obvious in Europe, where Japanese investors have been outright sellers, probably on political risk, in France in particular, where we've seen some heavy selling of French bonds over the last couple of months.
It's interesting because Chris Ferrone over at Strategist was pointing out yesterday that how, if you're looking at the performance for technology stocks and how they peaked in July when the yen first strengthened, if you're looking at the US dollar versus the Japanese yen, still around that 155 level, what are you watching there? And how does that kind of in relation to what we saw with China, their AI model, what that means kind of more broadly when you're looking at this space?
Yeah, like we had an interesting move yesterday. Like the Japanese yen was the clear outperformer. And I think if you look at the cost of hedging, going back to that point, and by that I mean just looking at 3-month money spreads, because a lot of Japanese investors hedge on a 3-month rolling basis. The cost of hedging is coming down, and it's coming down steadily. And as that happens, that obviously incentivizes Japanese investors to hedge more, which is essentially yen buying. And if that flow dynamic continues to gradually change, then I think you get back to the old traditional type moves that we might get, where you have a risk-off scenario, you have a drop in yields in the United States, and you have the Japanese yen outperforming, like what we had yesterday. But, we still have quite a substantial spread. So, of course, today we've seen the yen re-weaken again. Yeah, but I think the story is slowly changing.
But Derek, cut to the chase here. Do you have a vector of disinflation and lower yields? We got Ian Lyngen coming up here. He's in that camp. Bob Michael will be with us on the Fed show tomorrow. I mean, Derek, are you still looking for a disinflationary tendency?
Yeah, well, certainly in terms of a global perspective, I'm quite optimistic on inflation, and I think the battle is effectively close to won. But from a Japanese perspective, it's certainly different. And that's why I think that story is going to continue, where the BOJ continue to raise rates. And then while the Fed may be in for a period of pause, the more favorable inflation backdrop, certainly by the second half of this year, is going to allow the Fed to continue or to restart cutting rates. And then that kind of spread dynamic becomes more favorable for Japanese yen strength. But certainly in terms of the broader inflation picture, I'm more optimistic. Now, of course, we need to assess what Trump does in terms of trade tariffs.
Well, that's what I was going to ask you, because if the global battle is mostly won on inflation, what do you think is the biggest risk?
Well, yeah, like come to trade tariffs, obviously, because it all depends on the aggressiveness of the trade tariffs that are implemented. Now, if you look right now at the moment at dollar CAD, look at dollar MEX, the moves that we've had in those currencies do not reflect expectations of an implementation of a 25% trade tariff. So markets are still skeptical of Trump's willingness to act aggressively, given the near-term inflation risks. If we're wrong on that, and he is much more aggressive, and 25% on nearly 1/3 of your imports would be very, very substantial, then the inflation dynamic is obviously different.
Very quickly here, what's your key pair to make big figure moves? Jess Manton's got to pay back all the Texas A&M betting she did, where she went down in flames. What's the Derek Halpenny pair where I can make some money over the next 6 months?
Well, we have a dollar peak story in about 3 to 4 months. So if I do it over that period, I think the dollar still has more strength to go, but obviously not against the Japanese yen, like I mentioned. So we think euro can still drop below parity, assuming we do get this period of some adoption of trade tariffs, the Fed on hold probably until the summer, the ECB continuing to cut. I think euro dollar is heading to parity and potentially below.
Derek, thank you so much. Derek Halpenny with us this morning with MUFG here on the correlations. And yes, we did see correlations yesterday, didn't we?
That's right, we definitely did.
It wasn't just about NVIDIA.
No, there were other things going on in the market. And you know what, we were actually talking about financials earlier with Seema Shah, and actually financials in the S&P 500 hitting an all-time high. You obviously were pointing out how within the bucket of financials, you do have regionals, big banks, financials, fintech, insurers as well, looking at what's outperforming.
Sometimes if you make it to 90 years old, you die. We have lost a giant. Al Goldman was it A.G. Edwards. He was a profound influence on me. Al Goldman, you talk about getting on the squawk in the morning and having common sense. Art Cashin is the only equivalent I can think of. Al Goldman at 90 in St. Louis. Huge loss for me. Red and green on the screen. I'll get through this. Red and green on the screen. The VIX 18.12. It's a better tape, Jess. I mean, everything's said and done. It's a better tape.
It is a better tape today. We'll see if this turnaround Tuesday can pick up some steam here going into the opening bell, but we still have about 2 hours.
Even JetBlue.
That's right.
Out with earnings. Generous Motors. Lisa, was General Motors thumb up or thumb down?
Oh, sorry.
Was it thumb up or thumb down?
General Motors would thumb up.
Yeah, there's 400 earnings reports today?
There's a lot. That's what I'm trying to keep track of
Jess
right now.
has to look at each one of them. It's like a real job. Stay with us from New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the... Sorry, Tom, you're killing me. From the Bloomberg, what goes on in the breaks here? From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures. Well, pointing to a calmer session. This is after a tech-led sell-off really caused the world's 500 richest people to lose a combined $108 billion on Monday. That was led by NVIDIA's Jensen Huang. NVIDIA shares now up about 2%. So we'll start with NASDAQ futures up about 0.1%, 23 points. Dow futures little changed, up about 3. S&P futures up 0.1%. Or 6 points. We have the 2-year yield at 4.22%. That's up 2 basis points. The yield on the 10-year, 4.56%, and that's up 2 basis points. To earnings we go. We'll start with defense companies because you have Lockheed Martin. Their shares down 3%. Fourth quarter net sales missed estimates. Then we go to RTX. Their shares up 2%. They surpassed earnings expectations of final quarter of the year, and that was a big thanks to continuing demand for its military hardware, also aircraft maintenance services. But tomorrow begins a big MAG 7 7 kickoff. We have Tesla, Microsoft, Meta reporting after the bell tomorrow. And then we continue with Apple Thursday, Alphabet and Amazon announced next week, and NVIDIA February 26th. There's your breakdown. That is your Bloomberg Business Flash. Jess and Tom.
Is there any Big Mag 7 tonight?
Today, no.
So the big three are, so you'll have Microsoft, Tesla, and Meta after the bell on Wednesday.
And
then
that's
Apple
tomorrow.
is Thursday.
So I got the Fed meeting, and then I got to stay up.
Correct. Then you've got a whole bunch of techers.
Surveillance nap starts at 3:45.
It's a two-tanger.
Tomorrow.
It's going to be fun, Tom.
Darkening the door right now, fighting her way through her entourage. Catherine Greifeld joins us. Katie, I look at the ETF flow yesterday. You were studying this because Belchunas was at some conference where it was 85 degrees. What did ETFs do yesterday?
They did exactly what they usually do, and that is exhibit aggressive dip buying. It was pretty amazing. So you have what you would expect. You have SPY, that's S&P 500, taking in $6.3 billion yesterday. The Qs, that's big tech, $4.3 billion, biggest one-day inflow since 2021. But then you take a look at the silly stuff. You take a look at 3 times leveraged semiconductors. The ticker there is XOXL. That took in $1.3 billion. Tom, wow. That fund was down 23% yesterday. And apparently a lot of people didn't view that as a sign to capitulate.
Right.
They viewed that as a signal to buy.
I don't need it to 2 decimal points like Belchunas, but is there regular NVIDIA versus leveraged NVIDIA? What percentage is in leveraged NVIDIA, roughly? Like 1 in 10?
That, I'm not quite sure what you're asking. We do have a leveraged NVIDIA ETF that did see a lot of interest yesterday.
She's tough as nails.
Could you clarify, perhaps?
God, never again.
I love it.
Isabel Lee would never say that.
No, she
What I'm
wouldn't.
asking is, how many animals are buying triple leveraged NVIDIA versus regular NVIDIA? Just roughly.
There's a ton. I mean, NVIDIA itself, you take a look at just NVIDIA trading volume on the stock itself, I think it was 3 times the average yesterday, which is no surprise. When it comes to the flows themselves, we're still waiting for some of these funds to settle. We know that NVDL, that is 2 times long NVIDIA, that is one of the biggest single stock leverage funds out there. We're talking $4.3 billion in assets. That had a hideous day yesterday. I don't have the numbers yet for what exactly the final numbers are, but some people are, maybe they have better data than I do. They're saying they saw a record.
What was your observation off the desk here? Greifeld just gets all her information from Metten. So what did you see?
No, so for me, it was more because people talked about, gloom and doom, but you actually saw equal weight, you saw financials, you saw the broadening continuing.
You saw Meta and Apple.
You did, and Apple was one of them because it was really close. It was on pace for its worst start to a year since 2008, but then that was one of the ones that was in the green yesterday. So you did see, even though it seemed like a sea of red, you still saw a lot of buying in other corners of the market. And I'm sure Katie saw that too.
Oh, no, you two keep going here. I mean, come on.
Well, I was going to say, I'm really excited for the earnings calls this week. This was already going to be a big week. It just took on a lot more urgency.
Amps up the drama.
In terms of what kind of questions these executives are going to get asked about their AI spend.
Did you ever say that at Haverford? You're at a bar on Thursday night and you said, I'm really excited about the
earnings calls. Maybe when I was impersonating Tom Keene, but certainly not as a genuine statement.
The bow tie. Yeah.
It's just been a disaster. I just got an email in. All they want to know is how's Gus doing? I mean,
there we go.
Gus in the cold?
That's the main question.
He's having a great time. Last week, I'll say, was a little rough. It was like 8 degrees in New Jersey.
What do you do, like a blanket?
I do. We double blanket him. I bought him this new blanket, which was its whole experience, but it's basically like a sleeping bag that you put on this horse. It's so thick, and then we put something on top of that as well, so he stays extra warm.
Is it like the Sioux Indians in North Dakota with the winds blowing? He's like out of the tundra of New Jersey.
He does have a run-in shed, so he's fine. But I will say 32 degrees or whatever it is right now, this is like perfect weather for him. We're talking about a half Shire for our listeners at home. He's a thick.
A what?
A half Shire. It's one of those draft
horses. Is that like half a Bitcoin? Just what it costs?
It means that his dad was a Shire. Picture sort of the Budweiser horses.
Okay.
They're technically Clydesdales, but picture one of those, and then picture a slightly smaller horse who was his mom, and that's how Gus was made.
I love seeing those photos of Gus whenever you put them on X,
People yell
Twitter.
at me when I don't tweet about him.
Oh, do they?
Enough. Yeah.
Demanding on the weekends. They want to see
I'm sure you guys know the social media audience is very entitled to post.
Katie Greifeld, thank you so much. An ETF and Gus update. Seriously, folks, ETF coverage at Bloomberg is second to none. There's a guy named Bill Chunas who does okay at it, and others keep up with him with his books. He's got a wonderful book out on John Bogle at Vanguard and all that, but I just really can't say enough about world-class excellence in what is anybody buying anything, Jess, besides ETFs? The answer is no. Everybody's in ETFs.
It's for all the rages.
It's the rage.
That's what it is. Yeah.
Yeah. Michael Barr was in the triple leverage Detroit Lion
we need
ETF.
to get him back out here.
That really worked out. With our news in New York City, Michael Barr.
That's why I got holes in my shoes. Thank you very much. After rain extinguished the last of the big Palisades fire in Los Angeles, the city is now allowing everybody to go back in to see what remains of their homes. For the first time since the Palisades fire started, and days after President Trump visited, insisting everybody be allowed to go home, Los Angeles Mayor Karen Bass announcing all evacuees can return.
Today is really about focusing on the recovery and getting people back home.
This woman says some residents advised her not to go back because there's nothing left.
It's a lot to lose everything that you've collected, I think, over the last, your adult life and even your childhood.
The neighborhoods are only open to residents from 6 a.m. to 6 p.m. because there is no power, and some areas require a police escort to get in. Meanwhile, the Grammy Awards will look a little bit different this year. It will still take place Sunday at the Crypto.com Arena in Los Angeles, but now will focus its attention on wildfire relief efforts and fundraising. Scott Bessent has been confirmed as the next Treasury Secretary. He got bipartisan support in the Senate vote, 68-29. Bessent is the first openly gay individual to hold the role. Police in Indiana confirmed 5 people were shot at an Elkhart supermarket Monday. Elkhart Police Public Information Officer Jessica McBriar.
There were 2 individuals pronounced deceased inside the store. An individual who's believed to be the suspect was also pronounced deceased during the incident.
Spokeswoman Jessica McBriar also says 2 police officers were wounded. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. With us, Jess Manton, Paul Sweeney, Alex Steele with BAM Mutual. They'll be downtown at 10 o'clock with all the updates on the market here and some key economic data. Of course, the Fed meeting tomorrow. Jess Manton with me right now. We're making jokes about it, but after the emotion of yesterday and the narrowness of it, the recovery really started yesterday afternoon. I saw Micron just by chance.
Right.
And am I right that like 2 p.m. it was like, okay, that was done?
Right. And the most important trading hour, the final hour of trading, of course, especially going into the close and seeing how people are positioning, obviously, and especially at the start of the week. And, of course, ahead of the Fed meeting you were mentioning tomorrow. Actually, the options, though, I was looking at the options market. So coming into this week, it was actually supposed to be almost of a nothing burger as far as the S&P 500 moves. It was about 0.6% swing in either direction for Wednesday. But actually, it's a little bit higher now, about 0.8% move tomorrow based on what potentially we could get out of.
The late, great Al Goldman at A.G. Edwards, we lost him 4 days ago. He would say, look at the put-call ratio. Do you look at the put-call ratio?
I do.
Is that old fogey?
No, that is not. But also another thing I look at is when it comes to open interest, and more specifically VIX put open interest, because that's actually telling us that while traders were piling into VIX calls, the spot VIX index held up relatively low yesterday.
Coming up, Jess Manton on the tick ratio. I don't even know what that is. Oh, there's a tick right there. We're on YouTube. Subscribe to Bloomberg Podcast. This is Bloomberg's Surveillance.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. The daily look at the front page is a Lisa Mateo moment. It's brought to you by IBKR, with the average U.S. temperature in January 2025 be greater than 34 degrees. Trade your prediction with IBKR Forecast Trader. The yes was recently at a frigid 14%. Buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast. Lisa, what do you have?
Okay, so there used to be the social media trend where people would show off everything they bought, right? They would call it a haul, and they'd show off all these things they're doing. The kids were going crazy with it, showing off things at like Target and Amazon. Well, now there's a new trend. I'm excited for it because my daughter will spend less of my money. It's called No Buy 2025. So they're not buying. That's the whole different trend of it. So they're making lists of items that they won't buy. Some are promising to buy like these non-essential things that they used to buy all the time. But it's not just kids, though. It's adults, too. Like they're cutting back on the hair treatments, manicures, streaming platforms. So this is a new thing. People wanting to not spend as much in 2025 as they did in 2024.
What's a hair treatment?
A hair coloring, blow dry. It costs very much.
Are you thinking about one, Tom Keene?
This is a very expensive upkeep.
It's just the hair treatment thing is the biggest racket going.
See,
I see
feel like
these
you're
lights. I look on the phone and there's multiple. We're very treatment. Are we really going to spend less?
Yeah.
What do you think?
And I feel like you should try it.
Yeah, I should. Taylor should as well. What's next?
Less to the Tiffany store. There you go. So someone who did not get this no buying memo was Taylor Swift, because she's all over this is Business Insider. She had the full, you talked about it yesterday, the Louis Vuitton retails, the whole thing head to toe about $68,000.
Wow.
There is a complete breakdown. But the thing that stands out, it was kind of controversial because she had the monogram jacket, which is different because it used to be this quiet luxury trend, and now she just put it all out there, and it was Louis Vuitton everything and branding. So they're saying she's going to spark back this loud luxury trend instead. But
I wonder about it in the sense that so many people I know feel they can't wear luxury because of crime. This is serious stuff.
Crime. I didn't think about that. Okay.
It's like
Did not think about
serious
that.
stuff, and I just wonder. You know, I noticed the Taylor outfit. Wait, let me rephrase that.
Yes.
It was noticed in the
toe.
house.
Yes.
But I really wonder.
The jacket was $5,000 alone.
Wow.
Yeah. Well, you know, she's styling.
She's styling.
She was looking good, though. She was, yeah.
You know,
she's looking sharp.
Next.
She did. All right. Since we're talking luxury, this was in Fortune magazine. Kind of interesting because it talks about Disney World, and they're calling it actually a luxury experience because it's become this, tiered pricing scale, add-on fees. It's becoming unaffordable to just the average American family. So it really breaks down the price. You got to read it. It's pretty interesting. But over the last 10 years, Disney World ticket price has grown at almost 9 times the rate of inflation.
Yeah.
So a family of 4, $766 pre-tax for 4 one-day peak season tickets. And they're talking about the perks. It doesn't include the extra perks, like you need the lightning pass if you want to skip the line, the extended evening hour pass. That really the haves can afford and the have-nots just can't. So it's just kind of interesting.
Paul keeps track of this.
Yeah.
I don't really.
It is not. It's a. Thank goodness my kids are older right now, and I don't have to go through this. But it's a lot.
It's like
and a lot of parents
it's like
talking about
now.
it. It's ridiculous. They're saying Universal Studios is going to cost like $100 less. If you go to Busch Gardens, it's going to save your family like $300. It's just paying for the name. Yeah. Mickey Mouse.
Okay. Well, thank you so much. Lisa Mateo on the newspapers today. And now, folks, we need to go to College Station, Texas. Come on, Jess Menton. Did Dusty ever have you over to his house, the late Dusty Hill of ZZ Top?
No,
Were you out at the house?
Not. I was not invited. It would have been a lot of fun, though.
Did people drive by the house and look at 5,800 square feet of Dusty Hill?
I mean, it is popular.
It is popular.
It is something that comes up. Yeah.
I was told by Jess's people we got to play Texas music today. From College Station, Texas, the late Dusty Hill and his friends.
Like a
is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
The president is focused on geopolitics.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo, Michael Barr, Bloomberg Surveillance across the nation. Your commute. We say good morning on Apple CarPlay, Android Auto, Sirius XM. Good morning on YouTube, building each day. Subscribe to Bloomberg Podcast. That's how to find us. Thank you for that, growing each and every day. Paul Sweeney on assignment downtown with Alex Steele. Look for them, BAM Mutual, having an event, and they'll be there for it. We thank BAM Mutual for their support. Look for that at 10 o'clock. This morning, Jess Manton, the short straw. She has to come in after the hysterics yesterday. What was it like in the stock desk at 8 a.m. yesterday morning?
Oh, this is why we do it.
Yeah.
You know, these are the days that you prepare for so that you can get the positioning, you can tell people what are happening in derivatives, you can talk about the winners, the losers, and across different stocks and industries.
I didn't get any sense there were like margin calls.
No,
like there was like leverage and it went bad. Right. There really wasn't like financial
Right. There
trauma.
weren't concerns about credit spreads or anything like that.
Yeah, okay. Great on the screen. A little red and green earlier, a little better tape right now. Don't want to oversell that. NASDAQ up 0.3%, SPX up 0.2%, and the VIX 17.84, certainly much better than 24 hours ago. Bloomberg Surveillance this morning, brought to you by Cohn Resnick Advisory, Assurance, Tax with potential changes on the horizon. You will need to rethink your tax strategy. Cohn Resnick, their tax advisors, can help keep your business at the forefront. We thank Cohn Resnick for all of their support. From the Interactive Broker Studios, we need an update, a Bloomberg Business Flash, dressed in Louis Vuitton, Lisa Mateo.
I wish. That's morning. Futures, they are rebounding. This is after news about that cheaper AI model from China's DeepSeek. Really sent stocks plummeting yesterday. NVIDIA, in fact, sank 17%, wiping out more than $590 billion from the company's market value. This morning, though, shares on the mend up about 2%. Also on the rise, you have Broadcom up 3%, Marvell Technology up 3%. Even Constellation Energy, which helps power AI data centers, is up 3%. Because yesterday it had a 21% wipeout. NASDAQ futures up 0.2%, 58 points. Dow futures little changed, up about 7. We have S&P futures up 0.2% or 13 points. The 2-year yield at 4.21%, up 1 basis point, and the yield on the 10-year 4.56%, and that's up 2 basis points. To currencies, the dollar strengthening against its peers. This is as President Trump's promised much bigger tariffs. So we have the Bloomberg Dollar Spot Index up about 0.3%. The Japanese yen, euro, British pound weaker, and we have Bitcoin up about 1% at just over 102,000. A ton of earnings to get to today. I'll mention too, we have Boeing up about 0.5%. Fourth quarter adjusted free cash flow, $4.1 billion, and then shares of General Motors. 2025 adjusted EPS forecast beat estimates, but its shares down about 0.1%. Starbucks after the close too on top of that. That is your Bloomberg Business Flash. Jess and Tom.
Thanks so much. Greatly appreciate it. So here's the way it works, folks. You're either in the market, if you weren't, bond return, 0% cash, 5%, whatever. And then a lot of people are rationalizing out high single-digit returns, low single-digit returns. And others said, buy Mag 7, be comfortable with Mag 7, buy U.S. large cap, be comfortable, and did better than good. Leading the way on that was Emily Rowland. She's at John Hancock Investment Management. They're trying to get her over to work the Red Sox this year, so maybe she can do her magic for their middle relief pitching. Emily, let's not talk the Red Sox as depressing. Let's talk the continuation of what you got right last year. Do you state that U.S. large cap is the place to still be?
Yeah, Tom, we're still emphasizing quality, and U.S. large cap stocks are the poster child for quality. These are stocks that have great balance sheets. They have a ton of cash. They have great return on equity, but we've always cited that valuations were an issue. The S&P 500 Growth Index is trading at a 54% premium. to its 20-year average. So while we like owning tech stocks, it's kind of like buying expensive shoes. You know they're expensive, but you know their earnings are going to deliver. And that's why we've been, just like good shoes, they're going to deliver. We want to be there, but we're also on the hunt for quality at a reasonable price.
Yeah.
So as you know, we've also been emphasizing things like U.S. mid-cap stocks, looking for high quality sectors on sale like healthcare and industrials. So I think this broadening out in the market is healthy. We are still emphasizing the U.S. Over time, stock prices follow profits, and we're finding superior profits here in the U.S.
What's the definition of good shoes? I mean, if you're James Madison, then up to BC, I mean, is it a nice pair of LL Bean, like the 8-inch tall dark brown ones? Or is it a pair of Roger Vivier from Paris?
I'm a Jimmy Choo girl, so I just feel like they are so solid.
Really good.
They always deliver. Yeah.
On Madison Avenue, we call that James Choo. Jess Menton, pick it
You were
up.
just mentioning broadening out of the rally here, and I wanted to point out yesterday, so the S&P 500 consumer staples sector outperforming the S&P 500 technology sector by 8 percentage points, so that was its best performance relative to that group since 2002 here. So when you're talking about broadening out, obviously there's staples, especially when you're thinking about the earning outlook. There's different corners that have held up, but overall still struggling here. So where are you looking when you're thinking about broadening? Is staples one of them, or are you looking elsewhere?
Yeah, every dog has its day, and we've seen the dogs of the Dow sort of coming into the spotlight here from a performance perspective. Again, we're looking for high quality, so it's sectors like healthcare, which have gotten crushed over the past couple of years despite elevated earnings estimates. The healthcare sector is now trading at a 20% discount to the S&P 500, and it still sports businesses with lower beta. They're more defensive. They offer dividends. We're also looking at the industrial sector as an opportunity here as the U.S. is benefiting from massive onshoring activity, supply chains coming here from the United States and other parts of the world, the manufacturing renaissance that's playing out in the U.S. today, benefiting all the investment around that. Think about trucking and building and machinery. So the U.S. industrial sector, we think, is also poised for outperformance this year. And I would like to mention too that Europe is doing really well so far this year. I think the weaker dollar has been a critical element there. So if the dollar does continue to see some weakness here, that could also benefit international equities, which have really struggled as well over the past year or so.
So what did you do yesterday? Jess Menton's writing a story on this, so I got to ask you.
Thank you.
I mean, on a day like yesterday, you got, you're lined up, with all your people at John Hancock and meetings and all that. But are you on the phone as you take a break saying go long NVIDIA? I mean, what do? Buy the dip?
No, I mean, we're not really jumping on every tactical short-term trade. And as you can see, markets are getting whipsawed every day. Yesterday, obviously, was quite a wake-up call in terms of the concentration in the market. The top 10 stocks represent 40% of the S&P 500. I think it's like 39% now after yesterday. That happens when you see $600 billion in market cap wiped out in a day of one stock. But, it's certainly a wake-up call. And then on top of that, you've got all of these oscillating headlines around tariffs that are causing major whipsaw. We continue to focus on the longer term. Our outlook is 12 to 18 months. It's about following profits. It's about understanding where we are in this cycle, and then looking at the Fed to see if there are more clues about where we can go in the short term in terms of volatility there. And we'll find out more, of course, about that tomorrow.
There's a basket in the terminal where you can look at the Mag 7's growth premium, and actually if you're looking at its estimated PE ratio.
How do you do that? I don't know how to do that.
So I actually have it custom made for myself. This is what happens when you're on the equities team, Tom. We have fancy stuff over here. This is why y'all bring us in. But it actually was around a high of around 47. Now after yesterday's sell-off, it's dropped to about 43. So still elevated. But as you know, when there's so much criticism about when it comes to valuations. Of course, one of your buddies, Sam Rowe, has had a great column a couple weeks ago, Tom Keene, about...
my buddy.
about
he's on the board of trustees of the triple leveraged all cash
right,
fund.
and talking about kind of the... looking against even just when it comes to the counterpart of valuations and what that could mean. But when you look at this, I mean, at what point when you see a big sell-off like that, it's cheap enough to go back in after people were criticizing how expensive things were?
Yeah, I mean, we don't have an explicit target on that. I would think about the valuation element too, where it's not necessarily a catalyst to us. We're always looking, when we think about that ratio, we actually look at the denominator a lot more than we look at the numerator because sentiment can shift around a lot. We want to see where that earnings engine is, and we're still finding it in technology. Of course, there's a challenge now given the amount of positive sentiment in the space and how easily that can shift. So we've always wanted to diversify from that valuation risk by owning things that are on sale. So think about those expensive shoes. We also got to find those high quality shoes at a discount. Maybe it's the Nordstrom Rack, one of my favorite stores. So we want to think about finding that quality at a reasonable price. But certainly there could be an opportunity here to step in if we see a more meaningful sell-off in tech. We do have to remember that the market is tech. The U.S. is like a giant tech ETF. So we want to be rooting for this area of the market to hold in here as a broader sell-off is something that's quite likely if we do see further pressure on the technology sector.
This is great. We're going to do a remote with Emily Rowland from 497 Boylston Street in Boston. Nordstrom Rack, Newbury, Boston. We'll be there next time with Emily Rowland. Emily, thank you so much for the perspective, and congratulations on just hugely participating in the market through this bull market run. I have been most deficient of getting to the Fed meeting tomorrow. I cannot remember a time where there's been this many distractions, our politics, our investment in that. Seriously now, Michael McKee with a brief. Like the whisper number jobs day, is there a whisper question? Is there a whisper question for the press conference to make this exciting?
Yes and no. There's a question, but there's not going to be an answer. We were discussing it this morning in the newsroom. There is a Trump question that hangs over everything. But
and he's going to make a bold statement.
But it's not that, well, you know, he may be too busy with all of the other stuff that he's doing to make a statement on this meeting today. But Jay Powell's not going to rise to the bait. He's not going to answer anything like that. He's not going to say, he's not going to pick a fight with the president right now. So, yeah, I mean.
Okay, into this meeting, are we restrictive or accommodative? Is there a tone of the governors, the presidents, the voting members that they're behind?
Not that they're behind, but are we restrictive? Are we not restrictive? Yes. It depends on how you look at it.
Well, I know that's the Mike McKee answer, but where are
they're
we?
kind of divided on that at this point. And it depends on what you use to measure. If you're looking at financial conditions have been pretty easy because the stock market has been going up. Let's leave yesterday out of the equation. And that contributes to the financial conditions indexes looking easier, and there's more liquidity, and therefore it's easier to push up asset prices. But if you look at borrowing costs for most Americans, for mortgages or cars, credit cards, those are still restrictive. They have not moved at all since the Fed began cutting interest rates. So it kind of depends on what part of the economy you're looking at.
To Tom's point, when you have so many different events going on, what do you think the markets want to hear from Fed Chair Jerome Powell versus in reality what we will end up hearing from him?
Well, the markets always want to hear that the Fed thinks it's too tight and can cut rates farther. And you might get Powell endorsing the idea of further rate cuts at some point if inflation goes down. They always use the phrase, if the economy develops the way we anticipate. And that is probably about the best you could hope for this time. I don't think that Powell or anybody's going to want to go out on a limb and say, we're actually going to cut rates.
Let's go McChesney Martin, Harry Truman. I believe it was McChesney Martin, LBJ. I can't remember right now. The brain's not working this morning. But the bottom line is we have had presidents say the independence of the Fed is suspect. Is there a modern history here where a president can intrude on the process?
You go back to LBJ and you're talking
You
about
got to go back
Martin,
that far.
Yeah, and he took him down to the LBJ ranch and put him in the Cadillac and he went out on the rutted roads.
Well, Jess Metten does that, with her ex-boyfriend.
And made him sick. But Martin held to his guns and did not respond. Now, Richard Nixon and the Fed at the time, when he was running for re-election, and Arthur Burns, he did get him to run the economy hot, which helped contribute to the great inflation.
Right.
So yes, there is some tradition of it, but nothing since then because, let's say, the Fed learned its lesson.
In the meeting in December, so the last Fed meeting, Powell, as you probably remember, Mike, he brought up the Teal Book. So when discussing the potential effects of Teal Book for when you're thinking about tariffs and especially the effects on inflation as well as monetary policy. So obviously when you're thinking back, hearkening to the trade war that wouldn't happen before, obviously COVID occurred. What are your kind of views on the Teal Book, and what do you think? What else people want to?
Let me just explain to Tom.
Yeah.
What the hell is the Teal Book?
The Fed used to, when you were a Ute, the Fed used to have two books that they would present to the Open Market Committee, the Green Book and the Red Book, and one was scenarios and one was policy
choices. It's like
choices.
the Sears Roebuck Christmas catalog.
Yeah. And they combined the two, and they put a teal cover on it. It's now the Teal Book. So it's just one book. In 2018, when Donald Trump was putting tariffs on, the Fed staff put together a briefing in the Teal Book on how you should respond to tariffs and their impact on the economy. And if it was a one-time increase in tariffs, basically the idea was you look through it because it's not going to produce lasting inflation. It pushes the price level up, but doesn't produce ongoing inflation.
Let me explain Teal to you. Carl from New Hampshire listens often. He's got an ice rink in his backyard with a real Zamboni. Carl would tell you that you root for the original six in hockey, and then you root for the St. Louis Blues and a select group of the next six. And you never you never support an NHL team that wears teal. Okay. That's a card rule. Teal is, San Jose, they never got the memo.
I was thinking San Jose, but you know who else, of course, and they wear these when they wear the throwback uniforms, Pittsburgh Penguins.
That's right.
They originally wore
like
teal.
Pre-Lemieux almost.
Oh yeah.
Yeah.
When they first came into the league.
But Carl told me this once. You don't root for anybody wearing teal. The Teal Book?
The Teal Book.
Seriously,
yeah.
How thick is it?
They're not as thick as you would think. They're not huge, but
how in God's name do you know this? Paul Sweeney wouldn't know this.
Well, I used to be an economics reporter before I covered stocks, so.
She does it all.
Yeah.
She's hung out with the late Dusty Hill, ZZ Top at his house in College Station.
Wow.
I gotta say though, we don't have a lot of hockey down in Texas.
No, you don't.
It's more of a football place.
The Dallas Stars are going to take
That's
offense
right.
at that.
No. It's because I'm from South Texas, so we're more, the Dallas teams, not as much of a fan.
What is everything south of Abilene, South Texas?
Basically.
Michael McKee, thanks so much. Seriously, Mr. McKee, in an important press conference tomorrow, and I'm in the camp, folks. If nobody cares, guess what? It's going to be a surprise. The Fed decides tomorrow at 1:30. John Farrell, Lisa Abramowitz, and myself will bring you all that coverage. Right to it with our news in New York City. Michael Barr.
Thank you very much, Tom, Jess, Lisa. President Donald Trump has signed a flurry of executive orders focused on the military. One directs Defense Secretary Pete Hegseth to revise the Pentagon's policy on transgender troops, likely setting in motion a future ban on their military service. Other orders would roll back diversity programs and reinstate troops booted for refusing COVID-19 vaccines. The Centers for Disease Control and Prevention staff have been ordered to cut off all communications with the World Health Organization. This comes following an executive order from President Trump last week. Peter Maberduke is Access to Medicine's director at Public Citizen.
It's sometimes underappreciated how deeply the United States is involved in scientific collaboration internationally. There are more than 70 WHO collaborating centers in the United States. If the United States pulls out, our geopolitical competitors are waiting to fill that gap.
There's been some more diplomatic blowback over President Trump saying he will not rule out military force to seize control of Greenland. German Chancellor Olaf Scholz didn't mention the autonomous Danish territory of Greenland by name, but in a show of unity with his visiting Danish counterpart, Scholz said borders must not be moved by force. Danish Prime Minister Mette Frederiksen.
It is up to Europe to define the future of our continent. And I think we have to take more responsibility for our own security, strengthening our defense industry.
On Monday, Frederickson announced an almost $2 billion agreement with autonomous territories in the North Atlantic to strengthen its military presence around Greenland. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. We welcome all of you across the nation, your morning commutes across America, and of course on YouTube. Subscribe to Bloomberg Podcast. We are advantaged this morning with Jessica Menton with us with all of her equity coverage for Bloomberg. What's the theme of the equity desk now? What are you writing about this morning after yesterday's carnage?
We're looking at how the broadening, we keep talking about that. If you look at the amount of stocks that were higher on the New York Stock Exchange, it was about 57% yesterday. So even though you saw a lot of red on the screen.
Stocks went up.
Yes, you still saw, and also more than 300 stocks in the S&P 500 were higher yesterday.
Yeah, I mean, I think, folks, that's a very important point. A lot of this, of course, we'll have to sort out, including the actual DeepSeek AI story. We're going to continue to work on that. Red and green on the screen right now, the VIX 17.80.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers, minimum financial commitment offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we've got futures still trying to battle back on the men yesterday's tech-fueled sell-off. The Nasdaq fell more than 3%. The S&P 500 slid 1.5%. But like Jess was just mentioning, rising stocks in the benchmark S&P 500, well, it outnumbered declining ones 350 to 152. So we'll start with S&P futures up 0.3%, 18 points. Nasdaq futures up 0.4%, 87 points. Dow futures little changed, up about 2. Nvidia also fighting back after falling 17% Monday. They're now up about 2%. We go to the 2-year yield, 4.20%. That's up 1 basis point, and the yield on the 10-year 4.56%, and that's up 2 basis points. The dollar strengthened too. Bloomberg Dollar Spot Index up about 0.3%. More on the calendar for today, a read on consumer confidence, durable goods, and as Michael McKee was just saying, also brings the Federal Reserve's first policy meeting of 2025 and the Commerce Department data on GDP. All right, to earnings we go. We'll start with Kimberly-Clark. They make the Kleenex tissues a whole lot more. Well, they reported a quarterly sales decline. Adjusted earnings per share missed expectations. Its shares are down 1%. Then we go to travel. JetBlue. Well, they lost less money than Wall Street was expecting in the fourth quarter, but it looks like that just wasn't enough. Its shares are down about 8%. And finally, Royal Caribbean up 4%. Adjusted earnings per share topped estimates. It also said it's the busiest booking period. It's off to a record start. More people want to cruise. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. Jess Menton and Tom Keene. Paul Sweeney and Alex Steele with you at 10 a.m. this morning. There's in support of BAM Mutual. This is a joy, because with all this distraction of all this, I'm not taking enough time to take advantage of tax-free bonds. Nisha Patel is hugely popular when she's on. She's the parametric where they're piecing together muni bond portfolios. Let's just start with a basic idea. How did munis do? How did parametric do last year?
So look, fixed income munis, broad Bloomberg index, I would say was up positive, roughly about 1%, 1.5%. So we eked out a positive year. But look, realistically, Tom, it's been a tough few years for fixed income. There's no doubt about it.
But this is right where I wanted to go.
Yep.
It's been a tough few years.
Yes.
But am I right, tax-adjusted munis have outperformed other fixed income instruments?
On an investment grade basis. But, if you're looking at, let's say, the high yield part of the curve, we've seen a tremendous outperformance in high yield particularly. However, what I will say is that as we've seen spreads tighten, and as they have been tighter coming into this year, the investment grade space, particularly in municipal bonds, are looking very attractive going forward, right? For two reasons. Your starting yield is significantly higher today. And obviously, just as overall yields have come up significantly this year, you're seeing starting yields and absolute yields significantly higher. Reality is that tax rates for the highest tax bracket individuals is not going to change, right? So even if tax cuts are extended, your highest bracket is going to be 40.8%. So you started tax adjusting the 3 to 4% tax-free yields. You are looking at anywhere from 5.5% to 7.5% on a taxable equivalent basis for a very high quality asset class. So I think that is a very exciting part that, look, income is going to be a big component of your total return, but you just have a tremendous amount of yield cushion going forward.
This is real simple. Price down, yield up.
There we go.
That's all you need. You don't have to read for Bozy. That's all you need to know.
When you're speaking with your clients, especially as the calendar flipped to 2025, you have a new administration. You're obviously talking about what was happening in the muni bond space. What did the flows show, and what are some of the top questions that your clients have at this point?
Yes. So we had 2 years of negative outflows in 2022, 23, obviously as a result of just massive repricing to the upside in terms of yields. I would also argue that given just what equities were doing and the opportunity there, you're seeing much more of a tilt and a risk-on a mindset, if you will. Last year, we ended up seeing positive inflows. But that brings me to the point, the second point that I wanted to make is that I think the technicals, specifically for munis, municipal bonds, is set up to be very supportive. So I do think that you could see considerable inflows into the asset class. Just because we had seen so much money leave kind of 2 years prior. And again, just given where yields are, you're starting to see maybe some investors looking at, let's say, look, I'm not here to argue against equity valuations, but you start looking at maybe portfolios that have been underweight fixed income. There's a great opportunity here.
Help me here with a typical retail, like up in Boston, Good Morning 92.9. They got mass housing paper and they're out 22 years or whatever. It's like a yield hog play. Let's say they're popping Forpal tax-free, they're popping 7% plus.
Yes.
Address the risk they're taking there, or is that a sound strategy?
Look, I will say today, because the curve is significantly steeper, the opportunity is there to extend duration. And so, Tom, I'll
put... Out to 22 years?
If you wanted to make that play, and if you were in the mindset that, look, you're taking a price appreciation play at that point too.
Sure.
So to frame it another way, let's say you have a 6-year duration bond, and rates go down 50 basis points from here. So I think Bloomberg 10-year estimate is, let's call it a 410. You're looking at about a 3% price appreciation, plus
the coupon. Okay,
exactly.
So let me translate that for the audience. You got a 6-year maturity. It's called duration if you're Nisha Patel. And if you get price up, yield down, you get your coupon along the way. Plus, she's calculating a 3% return. So the math, ready, Jess? Control. 5 plus 3 equals 8. There we go. Good morning, Frank Fabosi in Connecticut. Jess?
So there's a 60-40 model portfolio that we have in the terminal. I know Tom's going to ask me, but I have something specifically made in my G for the terminal here. But it's interesting because, let me see here. It looks like 5 of the past 6 quarters, it's outperformed here. Obviously, there was a quarter there. It looks like at the end of 2022, obviously that was back when people were still debating about peak inflation and quite underperformed. But when you're thinking about kind of the model and people debate about 60-40, how do you view that? And do you think that still holds, or does it need to be readjusted?
Well, look, I think the 60-40 model probably, I don't want to say has been dead, but you've seen that readjusted anyways, right? With the introduction of, let's say, alternatives and other segments that are almost like a replacement, if you will, for maybe the equity type risk, or you could even say fixed income type risk. But what I will say is that somewhere along the way, I do think that you've seen generally an underweight to just the traditional fixed income. And a lot of that is because the yield hadn't been there. You also had seen this because the correlation had completely broken off, right? So you had stocks and bonds correlated, very highly correlated for a few years. Now, if we are in an environment where, certainly the Fed is not expected to cut tomorrow, but let's just say in the second half of this year, you start to see disinflationary trends, you see them as starting to cut. I do think that in that environment, you have that negative correlation coming back more for kind of what we've seen traditionally. So, again, I think that absolute yield here is pretty tremendous. And then, as you look at your asymmetric upside versus downside, it's very attractive.
Tell me about an opportunity off the horrific tragedy of California.
Yes.
What actually happens there? Do prices go down on LA County municipal paper?
Yes, absolutely unfortunate in terms of what's been happening. I suppose the good news is that we are seeing a majority of the fires contained. So, Tom, to answer your question, we have seen broader credits like the LA DWAP, which is the acronym Department of Power and Water and Power, widen out in terms of spreads. So you have seen some broader, larger issuers widen out. For that LA DWAP credit particularly, S&P recently had downgraded them based upon the speculation that they could be possibly found liable.
I was going to say, do they have a litigation risk?
Right, they have litigation risk. So you have a lot of these utility entities have litigation risk. You have certain school districts that have been impacted by the fire, University of California, certain campuses. So you have seen that market reaction. Now, I will say high level, from a credit perspective, we do think that these credits will hold up well, right? A lot of this is going to depend upon the investigation, the litigation, where this ends up. But you're talking about that LA DWAP credit being the largest utility system in the country with a massive revenue base and a diverse base. Okay. So, Tom, to answer your question, I would say you could argue there's possibly some pockets of opportunity here, just given that in a market like munis where it is retail dominated, you kind of have the baby getting thrown out with the bathwater.
You got to come back because, we got to talk about Texas A&M University System AAA bonds. They just did $382 million to go into the Jessica Menton
Oh, here we go.
Math, Science, and Economics building. College credits. You got to come back and talk about the.
I will do that next time.
The university racket.
Yes.
AAA.
That's right.
And they can't beat Texas.
Hey now, we're getting closer.
We're to you walking out of the studio.
Salt
Nisha
in the
Patel,
wounds.
love when you come in with
Thank
Parametric here as we take advantage of tax-free bonds. I learned that from Jay up in Boston. He's the one that told me that. Red and green on the screen. We'll see if Jess Menton returns to drive us forward. We get the market open in 1 hour. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures fighting back after yesterday's tech-fueled sell-off. Traders scooped up beaten down chip makers. Speaking of which, NVIDIA shares on the mend. They're now up about 3% after sinking 17% yesterday. We'll start with NASDAQ futures up 0.2%, 47 points. S&P futures up 0.1%, 9 points. Dow futures down about 0.1% or 43 points. We have the 2-year yield at 4.21%. Up 1 basis point. The yield on the 10-year, 4.56%. That's up 2 basis points. We have the Bloomberg Dollar Spot Index. That also battling back, up strong, up about 0.3%. Meanwhile, you have the Japanese yen, euro, British pound weaker this morning. To earnings, we'll start with defense companies. Lockheed Martin down 3%. Fourth quarter net sales missed estimates. Then meanwhile, RTX up 4%. Surpassed earnings expectations in the final quarter of the year. And finally, some companies making news. You have HSBC. It's going to wind down some of its investment banking operations in Europe, the UK, and the Americas. Yeah, its shares down about 0.1% in London. And finally, President Trump said Microsoft in talks to buy the U.S. arm of TikTok, and adding there will be, quote, a lot of bidders. That is your Bloomberg Business Flash. Jess and Tom.
Would you bid for TikTok?
I would not bid. I'm trying to ban it in my house.
We won't ask Jess Manton. She's probably glued to it. Are you?
I'm not on the TikTok. I'm too old for the TikTok.
Yeah, I agree. Bloomberg surveillance this morning. We're brought to you by BAM Mutual, a special day for BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provide guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com. BAMBonds, BAMBonds.com, and they're going to be visited by Alex Steele and Paul Sweeney today. Look for that at 10 a.m. Okay, the anticipation for this is unreal. He came out of Manchester, got a real job at IEA in Paris where he worked in an office, and he's been working from home for 30 years. Paul Sankey, from Deutsche to Wolf to now Paul. What's it like working at home at Sankey Research?
Well, it's not as much fun as the days when we had the trading floor. You know, I used to love interacting with the market maker and screaming at the bond guy. You remember Joe Livornia? Joe Livornia used to be our guy that would do the holler down the hoot and holler. Remember that? And the morning call. What I have saved is a lot of time. You know, what you realize is, there was hours of messing around for sure.
Let's get to it right now. This is hugely anticipated. Paul Sankey, describe AI, and from almost literally a thermodynamic standpoint, they are going to suck a lot of energy out, and it comes back to natural gas, doesn't it?
Yeah, so each of these NVIDIA chips uses about the same electricity as a household. So NVIDIA has sold like a Phoenix city worth of chips. You know, there's an enormous implicit demand for energy here. And what's interesting to me is they've sold the chips first. So there's a different cycle, you know, that the chips have been sold. Now they need to find the electricity. And the electricity is a big deal. And as we know from the shift that's been going on in the utilities industry with renewable and wind and everything else, your baseload power is under quite a lot of pressure, and chips need baseload power. So there was a pretty obvious tension here between electricity demand and electricity supply. And that was a great theme for last year. And it sort of blew up yesterday. So what you saw was Vistra, what you saw was Constellation, Talon, the darlings of the AI electricity supply story were down 30%.
Do you buy it? It's the end of the discussion?
No, I think it's the knee-jerk because the things just went up so much, you know. And it's not surprising that you would get a correction, you know, at the first sign of trouble, and that's pretty much what happened.
Yeah,
but you have to recognize that the power names are very levered to it.
That's a good point, because Vistra was one of the best performers in the S&P 500 last year after it was added to the index. Mm-hmm. So when you're talking about kind of the divergence there as far as like finding that type of electricity, what do we know so far about NVIDIA's plans, and what else does it need to do to rectify that?
Well, that's where it gets very tough, because it's just been a very grey area, you know. And so what was going to be a big week this week was going to be what's Meta saying about CapEx, what's Apple saying about CapEx, what's Tesla saying about CapEx, and they're all falling over at each other to buy more chips.
Because it's all the biggest customers of NVIDIA chips.
The biggest customers, and also the perceived bottleneck was the chip. But ultimately, if you look at the electricity situation, it's fascinating, because what we've been saying is, look, you're going to have the most dynamic industry in the world here, which is AI and chips. is going to meet the sleepiest, which is U.S. utilities, U.S. regulators, U.S. state, NIMBYs, you name it.
You mentioned Phoenix. Let's mention College Station, Texas. Is my electric bill going to go up because of AI and NVIDIA?
Yes, it should. It may even go up by hundreds of dollars a year because you can see at the margin of these electricity auctions that we're having, prices are up enormously.
So the public going to be outraged?
In due course, you would expect so, yeah. So I've done speeches, for example, for the Northeastern Gas Association, where they stand around shaking their heads at the implicit rise in power prices that is going to come through to individuals. Now, having said that, for a lot of individuals, particularly you, Tom, with your wealth, it's actually not that much money, right? It's only a few more $100s a year, but obviously it's regressive. So for poor people,
it's hugely regressive.
Yeah, absolutely.
And, I mean, the United Kingdom, it's shocking what it does to people. Are we going to see that because of AI in America?
You're going to see higher prices, absolutely. Now, there's one thing that changes everything, which makes this so hard to model, which is that if there's a question of electricity reliability, if the state plans or the federal plans would mean we ran out of electricity because you've got too much solar, then all the plans can just be changed by the given system operator. And so none of these plans are going to play out the way they appear on paper. And the ISOs, the service providers that have perceived problems, such as MISO in the MidCon, where the National Energy Reliability Council say they have the biggest problem with supply reliability, they'll just change all their plans and they won't have as much wind.
Right, and what's important here, Jess, is with the Texas grid, a disaster.
Yeah.
You were, your junior year at Texas A&M, you went without electricity for a month, right?
No, I think I graduated a lot earlier than you think I did.
Okay.
They were horses and carriages, mate.
We can take that, right? But we could go with that, though, if you want to, Tom.
That was the last time Texas A&M beat Texas at football. But Paul, I mean, Texas's grid is unprepared for this, right?
That's correct, though.
Well, I mean, yes and no. It's unprepared insofar as demand growth has been so extraordinary. I mean, look at the Texas economy. Look at the population growth. Look at the Bitcoin industry.
Yeah.
It's crazy. I mean, this is why we've argued that oil prices going down will be negative for the U.S. economy, because the single biggest driver of the U.S. economy has actually been Texas. It's the second biggest economy in the U.S. and it's the 8th biggest economy in the world in its own right.
So
so it's not surprising they run out of power.
I mean, the repercussions that could come with this.
Well, it is higher prices, and it's just going to be very interesting to watch it play out, because it's a bit like LNG. These are very big facilities. We can see them coming. You can't slip one under the door. You're either going to build a 2,000 megawatt nuclear power plant or you're not. But Facebook today, this week, is expected to announce a dedicated nuclear power plant just to build a model.
Where?
And you have somewhere in the U.S.
Somewhere in the U.S.
Yeah, exactly. And you have to, any time as oil analysts where we say, look, whenever we see capex booms of this scale, they always end badly. There's too much competition.
Exactly.
There's an arms race.
Yeah.
They're not going to make the revenues they thought they would. 4 out of the 5 players here will probably be embarrassed and humiliated and a lot poorer.
In the time we got left, what's the Paul Sankey barrel of Brent? I mean, the presidents in Davos, Farrell was in the front, not the front row, like 4 rows back.
Right.
As he's talking and he's blaming Saudi, telling him to bring the price down. Am I right? That's economically not the way it works?
Economically, it's really basically not the way it works. I mean, if you recall, President Trump asked for not the $600 billion that MBS, the Crown Prince of Saudi, had offered, but a $600 billion investment over the next 4 years. Trump just said, okay, let's ask for $1 trillion. Come on, you've got lots of money. But at the same time, ask for lower prices, and the two things just don't fit together. And that's not the only thing that doesn't fit together with what Trump's saying. Even if you look at Scott Bessent, the basic idea that you lower the deficit, but you grow the economy, and then grow production of oil and gas by 3 million barrels of oil equivalent per day makes no sense.
30 seconds. Paul Sankey, EVs here to stay? EVs growing?
Well, we'll see from the Tesla numbers. I mean, they've wobbled a bit on their models, but generally speaking, not really. No, we thought they wouldn't meet the forecast, the most optimistic forecast. You've got the tax credit going away, and broadly speaking, if people have 2 cars, we expect one of them to be electric. But in fact, for most people, we think the ICE vehicle will remain the vehicle of choice for convenience.
Paul, thank you. We got to get you back here in for a longer session next time. Paul Sankey, honestly legendary on the street with Sankey Research, and he doesn't like to work from home. He'd rather work from Lower Manhattan, pay the congestion
Wall
tax.
Street.
And,
I love it.
there's like Art Cash and Memorial Bar
Yes.
Hop that you do down there after the session closes. Paul Sankey, they're just brilliant there on the utilities. Just can't say enough about the mystery. I love that. They're going to build a nuclear plant, Facebook. And like where? How about that press release?
Right, yeah.
We'll have to see how that goes. Red and green on the screen right now into the Fed day tomorrow. Don't forget, the Fed decides tomorrow, 1:30. John Farrell, Lisa Abramowitz, and myself on the Fed meeting. We're on YouTube. Subscribe to Bloomberg Podcasts.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Tom Keene, Jess Menton in for Paul Sweeney. Paul Sweeney, Alex Steele here at the 10 o'clock hour. Joining us now, picking up the debris from yesterday. Menton had an attitude and said, if we don't have Emily Grafeo on, I'm not doing this. Emily Grafeo with us on the whipsaw of the tech space yesterday. What did, seriously, what did pros like you learn about the patience or lack of patience of the ETF trading game yesterday?
Well, we learned that no one was expecting the sell-off on Monday because people were piling into ultra bullish trades the week prior. Leveraged trades. But we also learned that people's patience is pretty short and they keep wanting to buy tech.
Do spreads widen out, or when you call this, they don't even understand. Rich, Emily and Jess don't even understand this. You call your broker and go sell the triple leverage.
There's actually a person that you call?
Come on, Tom. We don't do everything on our phones.
They can't get the trade done. Yesterday, trades were executed.
Yes. Well, yeah, there was actually a lot of ETF dip buying yesterday. QQQ, which this one isn't leveraged, but this is the biggest tech ETF from Invesco. It had its biggest inflow since 2021.
Really, the cubes continue. Who would have thought?
Okay, SPY, $6 billion, not any record, but pretty hefty. And then on the leverage side, I'll give you maybe something you don't know, Tom. NVDL, this is from Granite Shares. This is an ETF that goes 2x NVIDIA, had $1 billion inflow. And then SOXL, SOXL, which goes 3x an index of semiconductor stocks, had over $1 billion inflow just on Monday.
So whenever you're speaking with your sources, what are they saying about what they're buying, what they're selling after yesterday?
Well, they're still bullish. I mean, they're bidding up these ETFs. I mean, these ETFs, it's hard to tell because a lot of these trades are big institutional buyers who, I mean, if they want to call me up and talk about their buying, please hit me up.
This is important. The institutions are in this game.
Right.
It's not just people sitting on a couch like Lisa's kids.
No, it's not, because these are the sizes of these flows are indicative of bigger investors than just people on Robinhood.
Within our research, seriously, we're making jokes about it, folks, but this is the future. What's the average trading a given hedge fund? I mean, this isn't Pioneer or Putnam or Federated out in the West or Pittsburgh. These are like hedge fund people, animals. Okay, what's their average holding time?
Their average holding time?
Hours, days, weeks?
I would imagine it's honestly probably hours. But the retail, we have written stories about retail investors who hold it for longer. But you shouldn't.
So what do you think it tells us? Because a lot of contrarian indicators can be there if you're looking at flows one way or another, if you're looking at retail versus institutions and hedge funds. So what do you think this tells us right now? Because Vandertrack actually was saying that retail investors jumped in and were trying to buy NVIDIA yesterday on that drop. So usually that can be contrarian because it's different than what you would see the hedge funds doing.
Right. I mean, look, if you look at what we saw go into the mainstream ETFs, the Qs, SPYs, and the leveraged, it looks like an all-around kind of dip buying day, at least yesterday was. We'll have to see if that continues. I mean, SMH, which is just semiconductor ETF, that still saw outflows. So it was a little bit of a mixed bag. And then we also saw profit taking on a Dow ETF. Investors took out about $1 billion from an ETF that tracks the Dow yesterday.
Looking at this long term, like longer than a week, is money flowing into equity ETFs over the last, say, Q4 of last year?
Money is still flowing in.
People still believe in the market.
Yes, people still believe in the market. And that's why I think a lot of people were caught off guard yesterday because they had been bidding up a lot of these leveraged ETFs much.
You know, between her and Greifeld's side, I've been crushed twice today. It's
that's great.
You know, maybe you don't know this, Tom. The cubes. Thank you. It's nice.
I'm telling the listener.
Do you know I got my job at Bloomberg off a 5-trend Wells Wilder stochastic chart of the cubes? Literally, that's why Matt Winkler hired me. Emily Greifeld, Katie Greifeld, thank you so much, I think. Okay, Route 66 goes through Texas. It's like 8% of the route. Jess Benton had a tantrum and said, play something north of Abilene. Good morning.
Amarillo, Gallup, New Mexico, Flagstaff, Arizona, don't forget Winona, Kings, Barstow, San Bernardino. Once you get hip to this mindly tune, when you make that California trip, get your kicks on Route 66.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo with us as well. She's on the phone. Kids get off TikTok right now. She's working that at 9 a.m. here this morning. We welcome you on Global Wall Street. For Global Wall Street, without question. Good morning. Thank you, Paul Sankey, for being here, I should say, on hydrocarbons and utilities. But this is, with Ian Lyngen, an extended conversation on fixed income and into the Fed meeting tomorrow. We'll get to that here in a moment. Bloomberg Surveillance this morning, brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. And we thank Oppenheimer for their support this morning. Red and green on the screen. Jess Benton knowing the VIX staggering in from 21. What's the significance of under 18 VIX?
So it's actually under 20. So usually if it's above 20, it signals that there's underlying stress in the market. But it just briefly popped above that yesterday, then came down. It closed slightly below 18 yesterday.
So it wasn't like like in the Bart Simpson language. Bart got a CFA 1, 2, 3.
Yes.
Okay. On a Bart Simpson basis, we didn't have a cow yesterday.
No.
Okay.
No.
I mean,
the world is not over.
Okay, thank you. Jess Benton with us today, telling me how dumb I am, along with Catherine Greifeld and Emily Gray. Ian Lyngen is not going to tell us how dumb we are. This is a real treat, folks. I can't say enough about it, but first I got to do Lisa and the markets. We need an earnings update from the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
And there's certainly a lot to get to. First, we'll start with futures right now. Because they're rebounding, this is after news about a cheaper AI model from China's DeepSeek. It really sent stocks falling yesterday. NVIDIA actually sank 17% this morning, though. NVIDIA on the rebound up about 2%. Also on the rise, you have Broadcom Broadcom up nearly 3%, and Marvell Technology up 2%. So we'll start with NASDAQ futures. They're up about 0.2%, 49 points. S&P futures up 0.1%, 10 points. And Dow futures, little change, down about 41. The 2-year yield at 4.21%, up 1 basis point. The yield on the 10-year, 4.56%, up 2 basis points. To currency, the dollar strengthened. This is against all its peers. This is as President Trump's promised much bigger tariffs. You have the Bloomberg Dollar Spot Index up 0.3%. You have the Japanese yen down 0.6%. Same for the euro. British pound down about 0.5%. More earnings, like you said. General Motors swung to a loss in the fourth quarter. Huge charges related to China, but it's still top profit revenue expectations. But its share is still down 3%. And Boeing, it reported fourth quarter results largely in line with last week's pre-announcements, but analysts say they're looking for details on the pace of jet production. Its shares are down about 0.3%. That is your Bloomberg Business Flash. Jess and Tom.
Can I just editorialize that America needs a healthy Boeing? It's like that dominant in terms of trade. From an engineering standpoint, I hope they, forget about buy, hold, sell. I hope they get that fixed out. This is a joy. I'm going to spare the long introduction. The densest, most read note on fixed income on Wall Street is without question Ian Lyngen. He wandered through Parchment at Yale University in Minnesota, a CFA, and just absolutely iconic in terms of looking at rates. He holds court with BMO Capital Markets. His compliance told me he is on speaking terms with Brian Belsky. Belsky started drinking at 10 a.m. yesterday. What did you do? On the desk with correlation here, price down, yield up, is Ian Lyngen buying 10 years yesterday?
I do think that what we saw yesterday was the beginning of a repricing in of the safe haven quality of treasuries. We were reminded that there's more going on in the world than just tariffs, than just the Goldilocks economy. In fact, when things go wrong in equities or in different parts of the system, we see a quick bid for treasuries, and that's what we saw, that stabilizing bid.
You stole a line from Carly Simon, that great song she had, Apprehension. The apprehension is out there yesterday. I get that. But on a vector basis with a Fed meeting tomorrow, can Ian Lyngen say the disinflationary trend is still in place?
The disinflationary trend is in place, but we're trading off of the potential for a forward reflationary one based on tariffs, which frankly I think is somewhat overblown at this point. We are going to enter into a period where the data is confusing for the Fed because we'll have a floor in the realized inflation data as a function of the tariffs that presumably are going to be rolled out over the course of the next several quarters, and that's going to make it very difficult for the Fed to get back to normal.
Do you have a magnitude adjustment of the tariff in that, well, I guess we could, the line now is going to ramp in tariffs, but does Ian Lyngen make a distinction between 3%-ish all-in tariffs versus the magnitude the president's talking about? Those are two different stories, right?
They're two entirely different stories. However, I think the most important aspect is whether or not it's gradual or a one-off adjustment. Because if it's a one-off adjustment, the Fed's going to look at that and say, that's a tax on the consumer, let's move forward. If it's gradually brought in, which I can appreciate from a political perspective, you want to take the sticker shock out of higher prices, but that's an environment where the Fed's going to struggle to really break down the difference between true demand-side inflation and tariff-related inflation.
Looking at the 10-year, obviously it came down pretty significantly yesterday, but up about 2 basis points, around 4.55. But what does speculative net future positioning tell us about how investors are potentially shorting the 10-year?
I think that this is the part of the cycle where it is a make or break moment for the bear steepening narrative, and that is that core short from the speculative community in 10s and 30s that has been persistent throughout a lot of the cycle. I think that we're poised for a reversal. Everyone's been waiting for an opportunity to buy treasuries. They've been waiting for the proverbial dust to settle. Hasn't settled yet, but it's, to some extent, it's the opposite of what we've seen in the equity market, which is everyone's waiting for a moment to sell. Now people are waiting for a moment to add to treasuries.
Okay, they're going to add to treasuries, and we're going to get the second derivative. Convexity is going to come in, and yields are going to accelerate down. It's away from your remit, but if 10s and 30s move in an Ian Lyngen way, do we get mortgage rate relief? Does the housing market, which we all agree is a train wreck, does it get some relief this year?
I've been very surprised at how long the mortgage basis has stayed as high as it has.
And why is that?
Well, I think to a large extent, because of the regional banking crisis, we lost some of the core buyers in the mortgage business, which are the regional banks. They are starting to come back. They're starting to come back slowly, and I think that will compress the mortgage basis, which will, at a minimum, put a cap in for mortgage rates. I don't think that we're going back to a pre-pandemic reality for the mortgage space. Hopefully, at one point we will, but not at this stage. I think there's still plenty of work to be done.
So where do you think the neutral rate actually is, since we're going to have the Fed meeting tomorrow and the debate surrounding that, which is kind of like the million-dollar question?
My key observation in that regard is that it's a moving target. It was certainly higher during the last several year and a half than I think the market was expecting it, and the Fed. I'll also note that the Fed has moved up their longer run dot over the course of the last year. So they've indirectly acknowledged that it's 50 basis points higher at least, so that gets us to 3%. I would say it's probably 3.25, 3.5.
You're the only one I know, Ian Lyngen, who could say the longer run dot and keep a straight face. Ian Lyngen with us, with BMO Capital Markets, an extended conversation, a treat for global Wall Street. Really can't say enough about it. Red and green on the screen. The VIX comes in under 80. Just met and Coolcom collected today. It's 17.80. Yields move higher. I look at the 10-year real yield. I only do that to impress Ian Lyngen. 2.15%. Gone 220 to 210. We're back halfway on the real yield. I guess it's fear of missing out. We'll leave it at that. Jess, save me here with Ian Lyngen.
Well, because of the backdrop, and you were mentioning about the new administration coming in Washington under President Donald Trump, how is the market and the economy different now when he first was taken in 2017 versus what we're seeing at this point? And what does the bond market tell us about the direction of inflation in the economy?
Well, it is a decidedly different world than it was in the beginning of 2017 when he first took the presidency or took over. But what we did see is what we are seeing is a inflationary trend that's higher on average, but moderating versus where it was a couple years ago. We have a decidedly lower unemployment rate and the perception that we're in a Goldilocks economy that's going to continue in perpetuity. Now, that's a different departure point. Right. One observation I will make, though, is that a lot of the Trump-related trade war initiatives that he put in place during his first presidency were not wholesale unwound. A lot of the tariffs persisted. A lot of that protectionism was already, or is still in place, and so we're starting that process from a higher plateau, which does have more potentially negative ramifications for the global economy.
I look at Ian Lyngen at all this, and the heart of the matter is we had a great disinflation, very low yields, negative rates. We all know the drill. Is now normal within the historic span that you are expert at? Are we back to like these are normal interest rates for Kimberly-Clark or the Bank of Montreal and everybody else, Lisa Mateo? Is this normal?
If we look historically, it's very tempting to say, look, we're back towards the averages, we're back at normal. But the reality is that as the real economy has evolved over the course of the last 2 or 3 decades, we have become accustomed to lower real yields and lower nominal yields. So I'll argue that we're still at the upper end or the restrictive part of the cycle. And the nuance is that during the pandemic, everyone, including corporations, were able to lock in extremely low long-term financing, think of mortgages. And we're still working through that buffer to absorb higher inflation or to drive consumption. When that gives, that's when we'll realize how tight policy is.
Okay, so a year from now, where's the 10-year yield? Let's just start with that.
Well, we're certainly going to be trading with a 3 handle by the beginning of next year.
We had somebody the other day shock me from Peyton Regal out in L.A., Jeffrey Cleveland, saying a 360. I about fell off my chair. Ian Lyngen's not at a 360, right? You're at 380, 390?
Yeah, I think we could easily, at this time next year, we could easily be in a range between, let's call it 365 and 395. I don't think we're at 5.
How do we get there? Brian Belsky's, I'm on IB with Brian Belsky. Brian, thanks for watching YouTube. He's going to ask Ian how we get there. What's the how?
The Fed is going to be successful in their ability or in their endeavor to reestablish price stability. That brings forward inflation expectations down. Even if real rates stay roughly where we are, we could compress 10-year break-evens from 260 to 195 or 200 basis points, and that gets us right up against 4% right now.
Okay, for the non-global Wall Street, I'm going to translate that. Is the inflation-adjusted yield, even with stability, the other parts of the yield structure are price up, yield down, right?
Mm-hmm.
Did I do okay there? I only got to page 300 from Bosie. Leave me alone.
Well, actually, like looking at the 10-year, I mean, it was around 3.6 back in September. Obviously, a lot of things have transpired since then, but that wasn't that long ago, to your point.
Mm-hmm.
So how do you think it kind of builds on that?
Well, we were let's call it 430 to 440 recently, and that was with break-evens at 210. All we need to do is get forward expectations of inflation to price out the Trump reflation trade and start to price in the potential for economic damage to be done from a global trade war.
Does that happen soonest because of rents, OER, and the rest of the housing complex, or is it the price of eggs finally comes in?
I think at the end of the day, what we see is the super core measure of inflation, which is core services excluding rent and OER. That printed at just 0.2 in December, and there's downward potential yet to be realized there. I think we could very easily see that because has the high correlation with realized wages, and the employment market, while ostensibly on strong footing, we're at the point where we would expect to see further job reduction and an increase in the unemployment rate. Yet to be realized. I'll be the first to acknowledge that.
If you could ask Fed Chair Powell a question at his press conference tomorrow, what would it be?
I would never ask that question.
Well, the biggest question on my mind, and the one that I suspect that the chair would be unwilling to answer, is we see the dispersion of the dot plot. Which dot is yours? What's the chair thinking?
But come on, they're not going to answer that question. Are we done with the dots? I've been asking this since Richard Berner was at Morgan Stanley, and we're both going mental about the dots. Are we done with the dot experiment? Ian, do you get any value out of it?
So I think that's a very, very interesting observation because the Fed has tried so hard to de-emphasize the value of the dots and their forward predictive qualities. But at the end of the day, the algos and the CTAs, they need something to trade. They need a number.
Why do we care about them? We care about the efficacy of America based on a dual mandate. We don't care about the roulette wheel of the CTA machine, Monroe Trout.
Right, because Jim Bullard, who used to work at the St. Louis
Fed,
would
push
back against that too.
Why do we give a damn about CTAs when we're trying to create public policy here with the Fed?
Well, I don't think that the Fed cares as much about the dots as the market does, and the market only cares about the dots because we need something to trade when the updated SEP hits, and we're not going to trade the growth numbers, we're not going to trade the inflation numbers because they're always overly optimistic and they assume that the Fed's doing their job.
And we won't get the dots this time because they're quarterly, so we won't get them again until March. So there you go.
How do we get rid of the dots, a wise one?
So I will argue that there has been a very concerted effort to increase transparency over the course of the last 20 years by monetary policymakers, the Fed, but globally. That hasn't necessarily translated through to the best outcome. There's a case to be made for less transparency, for speaking a little bit less, giving a little bit less forward guidance, and dropping the dots, I think, could be a reasonable first step towards that objective. I don't think they'll do it, but I could argue that they might.
Well, that's an interesting point because the communication with the Federal Reserve has changed so much, even coming out of the housing crisis with Bernanke. There used to not be press conferences after these statements, especially when Greenspan was Fed chair. And now, once Powell came into play, you started having them after every meeting, not even every other meeting. So how do you think, what would be the sort of way that they would communicate less? Because it seems like the markets want to know every little detail.
I think that the first step towards a more unified communication process would be to be a bit more sparing on how the regional banking presidents speak and how the non-core members of the FOMC are able to air their views, as it were. I don't think that's going to happen, but a convergence of thinking, I think, would be a bit key on the messaging side. But again,
I'm busting your chops, but we're getting a huge response on YouTube. Thank you so much. I can't say enough, folks, about Ian Lyngen. As someone out on YouTube said, he's the only one that makes the complexities of what Frank Frobosi wrought somehow in the King's English. Ian Lyngen is with BMO Capital Markets. Can't say enough about his morning note. Look for that. Get that from the Bank of Montreal, BMO Capital Markets. Right to it, red and green on the screen with our news in New York City. Michael Barr.
Thank you very much, Tom, Jess, Lisa. The White House is pausing federal grants and loans starting today as President Trump's administration begins an across-the-board review of its spending. The decision could affect trillions of dollars and cause widespread disruption in healthcare, research, education programs, and other initiatives. President Trump, before the House Republican Members Conference dinner at his Doral International Club in Florida, also made a promise to seniors.
I will not sign any bill that cuts even a single penny from Medicare or Social Security for our great seniors.
President Trump signed an executive order that could set in motion a ban on transgender troops in the military. Other orders would roll back diversity programs and reinstate troops booted for refusing COVID-19 vaccines. The Senate Committee on Commerce is taking a closer look at the Panama Canal today and its importance to the U.S. economy. Bloomberg's Amy Morris reports from Washington.
Republican Senator Ted Cruz of Texas called the hearing to examine the fees and the influence of the canal and its impact on U.S. trade and national security. President Trump said during his inauguration speech that the Chinese military is operating the Panama Canal.
And we didn't give it to China, we gave it to Panama, and we're taking it back.
The U.S. is the biggest user of the canal, China a distant second. Guests at the hearing include the chair of the Federal Maritime Commission and the president of the World Shipping Council. In Washington, Amy Morris, Bloomberg Radio.
In Los Angeles, there are still people seeing the devastation from deadly wildfires for the first time. All Palisades residents were officially allowed to come back. Many residents are returning to burned out homes and lost possessions. This man's home was burned to the ground.
The thing I'm really having a hard time, I just saw a neighbor looking for her cat, What I'm struggling with is we really had a special street here on Bollinger.
At least 29 people died because of the fires. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, Lisa.
Michael Barr, thanks so much. Jess Menton with us here, sitting in for Paul Sweeney. Sweeney and Alex, too, they're setting up. Now, when they go down to BAM Mutual, they get a real breakfast.
I feel like we don't have a full breakfast.
One of the people emailed me and said, oh, my God, it's like an English breakfast. Alex is just chowing down sausages and beans and the thing I never eat, the little black, little circle thing. And
sounds like they're having a lot of fun, Sweeney and Alex.
It's like a real breakfast, unlike the gluten-free stuff Lisa Mateo has for us every morning. Tell me about your special templates. What does your template say about this equity market this morning?
Well,
is there a fear of missing out this morning?
JP Morgan just put out their retail data, and you saw a record amount of buying there as well. So you saw investors still buying the dip, and this JP Morgan just put out their retail radar.
She's got a conduit to James Diamond. It's amazing how Jess Minton does that. Red and green on the screen. We're on YouTube. Subscribe to Bloomberg Podcasts.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And And this Bloomberg Futures Report is brought to you by IBKR. Will the U.S. CPI exceed 2.8% in January 2025? Trade your prediction with IBKR Forecast Trader. The yes was recently at 35%. Buy yes or no and earn $1 if you're right. Go to ibkr.com/forecast. All right, we've got futures just trying to battle back after yesterday's tech-fueled sell-off tied to Chinese AI developer DeepSeek. Right now, NASDAQ futures up about 0.1%, 25 points. S&P futures up 0.1%, 7 points. Dow futures, though, little change, down about 4. NVIDIA fighting back, too. Right now, it's up about 2% after falling 17% yesterday. We'll get to the 2-year yield, 4.21%, up 2 basis points. The yield on the 10-year, 4.56%, up 3 basis points. More economic data out. You had durable goods orders for December. Came in lower than expected, down 2.2%. In about a half hour from now, we'll get a read on consumer confidence. And a quick check of companies making news. Chevron launching a new partnership to develop gas plants next to data centers. That's allowing it to kind of tap into that demand for electricity from AI. And then Starbucks reorganizing its top ranks. Sarah Trilling, she's the president of North America. Arthur Valdez, he's a chief supply customer solutions officer. They will be leaving the company. Starbucks reports after the bell. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. Just met and Tom Keene, Paul Sweeney, and Alex Steele here in about 30 minutes as well. Thank you for the huge response to Ian Lyngen on bonds. Now on equities, Phil Newhart joins us with First Citizens Bank and Trust Company. The only reason he's on is Sweeney says when Duke wins in basketball, we got to have a Duke graduate on. So, that's why Phil's here as well. I love your long-term perspective. How do you tell a conservative First Citizens Bank and Trust Company client to calm down after what we witnessed yesterday?
Yeah. Our clients tend to be pretty calm. Long-term investors, they're handling yesterday fairly well from what I've seen. We are emphasizing, we've been doing this for some time, balance in portfolios, right? It's not just an equity game anymore. We have fixed income. You have a Bloomberg aggregate bond index.
And your people are willing to get a mid-teens return off that instead of popping 20% plus off MAG 3?
Sometimes it takes some convincing, but you're getting 4.9% yield on the ag. That has to matter compared to where we were a few years ago.
The ag that's like when you're in equities.
Right.
Yeah, that's right. That's all we know in equities.
Would never say that.
Yeah.
You were just talking about how your clients, as far as an emotional sense, after such a decline yesterday. I mean, given that, the S&P 500 came off the lows, was only down 1.5%. I mean, obviously down more than 1%. But talk to us about kind of the emotions and lack thereof for your clients.
I think that when you really have a pretty modest sell down of the S&P, it's a reminder that yesterday was pretty narrow in terms of the drawdown, and it's reminding of the importance of broadening. We've been in the broadening camp. We had it for a while last year. Of course, then we narrowed again in the fourth quarter. A quarter of S&P or Russell 3000 stocks have gross margin over 60%. Right, there are a lot of good names out there outside just the Magnificent Seven, and valuation speaks to that as well.
So what are those names?
Yeah, look, we like growth across the spectrum, not just in large cap space. Additionally, we like international developed small cap. We are underweight emerging market for a lot of reasons, but we do still think there's value out there just outside of the largest 10 names.
Yeah, emerging markets includes Chapel Hill.
Yeah.
That's right.
Let me get this in before the market opening as well. I love your research note because you speak of an optimism of America. Do you see a sustained nominal GDP, which can use to pop revenue, which makes margins work for corporations?
We do. GDP keeps being revised up. We get fourth quarter GDP later this week. GDP now from the Atlanta Fed's at 3.0%. You keep seeing numbers rise. Personal consumption's hanging in because the labor market's hanging in. 70% of GDP is personal consumption. So we do see, we're constructive. We're constructive on the U.S. economy.
Just so you know, when you're down south like that, the only Fed you look at is the Atlanta Fed. He hasn't looked at San Francisco research in 30 years. Get one more in here.
We were talking about what you were buying. What are you selling? What do you not want to add exposure to?
Yeah. Our main underweight is emerging markets. From valuation perspective and structural, obviously a lot of talk around tariffs, et cetera. So our main underweight from an equity perspective is emerging markets.
Why?
Structural and valuation.
But it's got to be the dollar. The number one correlation of EM you got to have a weak dollar to make it work.
That's
Am I
right.
wrong?
And why would you see a weaker dollar right now? Dollar strength persists. I mean, we have other central banks in developed world, other than the Bank of Japan, are going to be cutting. Right? You have the Fed. You have rates still high here.
Right.
To us, there's real support underneath the dollar.
Let's do this. Let's come back. We've got to get the market open here. It's a Lisa Mateo moment as well. Green on the screen and a lift to the market into the opening. Futures up 10. I'm going to call it fractional, but we'll take it. After yesterday, the VIX under 18 decisively, 17.73 as well. Correlation with yields recovering, going the other way. The 10-year real yield higher as well. And now to consider Wall Street, Lisa Mateo.
Yeah, will that lift continue? Because yesterday was quite a doozy, fueled by that tech-fueled sell-off. So we'll start with the S&P 500, because that's right, open right now. 0.2%. That's up 0.2%, 15.6027. The Dow, little change, up about 20 points, 44,734. And the Nasdaq just kicking in, up 0.4%, 80 points, 19,418. We get to the 2-year yield, 4.21%, up 1 basis point. The yield on the 10-year, 4.56%, and that's up 3 basis points. We have Brent crude $77 a barrel, up nearly 1%. WTI crude $73 a barrel. We have spot gold up about 0.5%, $2,754 an ounce. And the Bloomberg Dollar Spot Index right now up about 0.3%. At the open, have to check in with NVIDIA up 2.5%, Broadcom up 2%, and we have Marvell Technologies up 3%. That is your Bloomberg opening bell report. Jess and Tom.
You know, folks, I gotta, make this clear. When the market opens, Jess Menton's Bloomberg screen looks like she's landed the lunar module on the moon. What do you look at the opening, oh wise one?
So I actually look at MOV. So what you can do is you can see So if you do SPX and then do MOV, it'll take you to kind of what Lisa was just talking about, the winners, the losers right now, what's the top, and you can look at percent performance as well as points. So from a point basis, NVIDIA best point performer right now, and then you can change that to percent as well. So Royal Caribbean looks like it's one of the better percent gainers, but then you brought up GM earlier. That's the biggest percent decliner right now, down 9%.
GM's down 9%.
Yes.
You and I were talking about autos
exactly
hours ago. Can we have you ask a question of Phil Newhart, or I mean, can you tear yourself away from the screen?
I can.
Chris Nagy's probably, she's got to stay on the screen.
Right, no, exactly. No, Chris keeps me like that, and then Jeremy Herron and Eric Weiner too. But something else I'm curious about is, because we were talking about EM, we were talking about the dollar. What about when you're thinking about yields? There was so much concern about the move in yields. Right. Now we're getting closer to about 4 or 5, but still, where do you need to see the level for equities to not be quite as under pressure in certain segments?
Yeah, I think we see pressure when the 10-year approaches 5%. We saw that in 2023, and we've seen that this year. Really 4.5%. But by the way, 4.5% to 5% is not high by any historical standard. So I'm not sure it alone brings down equities. But 4.5%, I think the equities can absorb, and we saw that last week. Yesterday had nothing to do with rates. In fact, rates were down. That really had to do with DeepSeek. So I think 4.5% is okay. It's getting closer to 5% that is a risk, and that feeds back to inflation.
We're doing this show today for Chris Hickman. Thank you so much for mentioning Al Goldman. Al Goldman dying at 90 years old. He was definitive at A.G. Edwards. He told me, never forget the behavioral construct. If you were talking to First Citizens clients now, what's the behavioral emotion they need to have to get through the next 3 years?
Yeah, what we're saying is look, our S&P 500 price target is 6,400. That's up, it's constructive, it's below top-down consensus, but we are emphasizing that we think it's going to be a choppy year, right? Look at policy uncertainty, fiscal, trade, monetary. Look at rate volatility. We have a new administration. There is a lot coming down the pike, and we're priced to perfection, at least when you look at the market as overall. We want clients to expect volatility more than we saw last year. Peak to trough max drawdown last year was 8.5%. Right. I think that
we didn't have a correction last year.
We did not have a correction last year.
An Al Goldman correction.
If we get
through, didn't have it.
Yeah. So we need to get used to the fact that equities are a volatile asset class, and we're going to see volatility. Again, that is why balance in portfolios matters. We don't want clients thinking that markets move up in a straight line.
Crash in 1987. Al Goldberg. Goldman to Tom Keene. Tom, show up for work tomorrow. That was basically, that was the wisdom.
And that was good news.
Yeah, it was a 2-martini night. I'm lying.
Yeah.
It was a 3-martini
Exactly.
night. Phil Neward, thank you so much.
Absolutely.
With First Citizens and their market strategy, market and economic research, I should say, as well. It's a Just Met market. We got green on the screen. What other wisdom can you give me from the Cray workstation, the Sun Microsystems workstation?
I also like to use the function WEIB to look at market breadth. That is another one that not a lot of people follow, but then you can go through and you can see the new highs, the new lows, the moving averages, the technical breadth.
WEIB?
Yes, WEIB.
WEIB.
Correct.
I think Sweeney uses that one. I don't use that one.
I may have told him about that one.
Okay. I just got an email from Mike from Bedford. Keep this Metten kid on. I said, okay, Mike,
okay.
We'll work with that.
All right, still employed.
Right now, the Dow up 55 points. Please stay with much more coming up. We're on YouTube. Subscribe to Bloomberg Podcast, building each and every day.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in stocks this morning. This is compared to yesterday's rough day for tech. So right now, we'll start with the NASDAQ. Little change, down about 11 points. The Dow up about 0.1%, 56 points. And the S&P 500, little change, down about 1. We have the 2-year yield at 4.21%. That's up 1 basis point. And the yield on the 10-year, 4.56%. And that's up 2 basis points. Since we mentioned stocks, want to go to the major industry groups, head to the IMAP feature of your terminal. Right now, where is the biggest pull coming from? Well, it looks like communication services is up at top. Then you have media and entertainment. Then you have interactive media and services. You continue to click through. And at the top, we have Meta. They're up about 1.5%. And then that's followed by Google. Those shares are little changed. Want to head to earnings because travel, JetBlue, really taking a hit this morning, down 17%. It lost less money than Wall Street was expecting in the fourth quarter, but looks like it just wasn't enough. And maybe more people are cruising because Royal Caribbean up 6%. The company says its busiest booking period is off to a record start. That is your Bloomberg Business Flash. Jess and Tom.
Lisa, thanks so much. Just Metten here. Still here. Well, you're killing yourself over there in the computer. What are you doing? Talking to all the people in the equity team here?
Basically, checking in, seeing what's going on.
What's going on? I mean, there's a few. Do you understand there's people out there listening to us, Jess?
Yes, of course.
It's not just you, me, and Lisa.
Even though it feels so intimate in here.
What is going on off the equity desk?
So actually, I was taking a look at what you were talking about with Starbucks, S-Bucks here. So actually,
change in management.
It is. There is a change in management, and if you look at this, replacing 2 executives as the CEO attempts a rebound. So Brian Niccol, he used to be the CEO over at Chipotle. He left back in August. He came over. They're supposed to have this big overhaul with going on with Starbucks. And I want to point out, he was awarded $96 million in his first few months on the job. So that was about a record here.
Barry Ritholtz and I had lunch the other day, and we both agreed the way to get Starbucks to go is to bring margaritas over from Chipotle.
I like this idea.
Starbucks.
I think that might be doing it because they're trying to get rid of some oil-infused type things that I didn't even realize that was on the menu before.
Oil-infused. Yeah, Lisa drinks those. Joining us now, and I'm going to, there's like what's going on right now and all that. Forget about it. It is the most anticipated book in investment this year. I love it. It's a massive what we call type 2 negative construct, how not to invest, with the author Barry Ritholtz. And Mr. Ritholtz joins us this morning. Of course, Ritholtz, Wealth Management and Masters in Business and At the Money podcast as well. Barry, the ideas number, behaviors that destroy wealth. What's the number one behavior after yesterday's train wreck that destroys wealth?
We all have this belief that we know what's going on today, and that allows us to have pretty good idea what's coming next. And other than a handful of geeks who kind of discovered DeepSeek a week or two ago, the investing public had no idea that there was this credible threat from overseas. The thought was that China, without access to the higher end 100 chips from NVIDIA, would never be able to do this. And, to their credit, we still don't know the full story. We don't know, 25% of NVIDIA chips go to Singapore. It's not unthinkable that some of that finds its way to China. But the innovation that cannot be denied is in software, which allows the chunking of inquiries that requires an order of magnitude less semiconductor horsepower and cheaper costs. It's a fraction of what is expected, both in GPUs and in energy consumption, and potentially, and the market obviously thought this yesterday, this is a game changer.
Right. Red and green on the screen right now, the VIX 1805. Just meant to jump in here with Barry because I got something more important to talk about.
Barry, what are your clients asking to buy it and sell at this point after yesterday's sell-off?
So, I'm fond of saying that the time to read the instructions on the seat back of the chair in front of you is, when you're on the tarmac before you take off. If you're at 25,000 feet and an engine's on fire, probably a little late to make a good, non-emotional judgment. So we spend a lot of time with, hey, this is normal. Here's, I put up a chart today showing the drawdowns in NVIDIA. If now we're big, broad index investors, but if you want to own NVIDIA or an AI ETF or anything in that space, you must brace yourself emotionally for these giant drawdowns.
Okay.
22, 23, down 66%.
Two questions. One short. When's the book out? How Not to Invest. When do we see it?
March 18th. We're,
March 18th.
48 days away? Something like that?
Have your people talk to my people. Let's do a big 2-block splash on that. Something around March 18th.
Love to.
Okay. I don't care, Barry. Joining us now, folks, surveillance New York Knicks correspondent, Barry Ritholtz. What happened? Can they take on the Celtics?
I don't know. I'm really very much looking forward to Saturday's game. I'm going to see what could be LeBron James's last game at Madison Square Garden with the Lakers. So really exciting. When was the last time the Knicks had two starters play in the NBA All-Star game? I want to say it's since the early 1970s. Has it been 50 years? It's insane to think it's that long. I don't know. We'll see. It's still early. We haven't gotten to the halftime break. I have been hypercritical of the ownership of the Knicks, and I have to shut up now because they seem to be making the right coaching moves, the right player moves.
Okay,
they're on the game.
I got to go to Michael Barr. He doesn't want this Knicks talk. He wants to talk to Detroit Pistons. but Barry, just as simple as this, the Knicks bench is so weak. Are you sitting on the bench ready to play?
I used to have pretty good outside shot, but we used to, through I think it was Amex or somebody, used to go to the practices and watch. And first, you just don't realize how giant these guys are and how fast they are given their size, number one, and how, especially today, how incredibly accurate they are. If someone doesn't have a hand in their face, they're shooting 95%. Watching them warm up is like, oh my God, has someone please miss? It's crazy. And so, the game is played at a level now. Whenever people say, the Knicks, the Frazier era, I don't know if people in the 70s, which maybe there was a little more physical era, but I don't know if they have the modern skill set. Obviously, it was a different time. I'm pretty comfortable watching them where they are. I I'm very excited about it.
Don't be a stranger. I got to go. We look forward to March, middle of March, how not to invest out. Barry Ritholtz there, our Knicks correspondent. With our news in New York City, Michael Barr.
Thank you very much, Tom, Jess, and John. Now, the Trump administration has directed federal agencies to pause federal funding, including grants and loans, to review compliance with Trump's executive orders. The move is seen as an opening shot in a constitutional fight over the president's ability to unilaterally halt spending approved by Congress. The pause is expected to affect a broad range of programs, including foreign aid, housing vouchers, and nutrition assistance, and may spark lawsuits from affected recipients. U.S. public health officials have been told to stop working with the World Health Organization effective immediately. The surprise decision is focused on the U.S. Centers for Disease Control and Prevention. A CDC official sent a memo to senior leaders at the agency telling them that all agency staff who work with the WHO must immediately stop their collaborations and await further guidance. Peter Maybarduk is the Access to Medicines Director at Public Citizen.
The WHO manages a global influenza surveillance and response system and a pandemic flu preparedness framework. And if the United States and our laboratories were to lose access to that framework, that could be very dangerous for Americans.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Jess, and John.
And Michael Barr, thanks so much. Jess, markets reverse in NVIDIA, not now, but intraday, a new low.
That's right. NVIDIA
you
is
didn't
lower.
warn me about this.
I know. Unfortunately, it gave up those early gains. So looking at NVIDIA now, NVDA down actually about 0.1%, but had been a little bit lower earlier when you first, when Michael Barr first started talking.
Yeah,
here.
but the whole theme this morning was, John Tucker said to me, I said, what's the theme? And Tucker said morning bounce.
We were hoping for a turnaround Tuesday.
Morning
you know what, though? We're
bounce.
going to have to wait and see what happens by 4.
Oh, listen to you. Come on, it's a new low in NVIDIA right now.
Well, it is, but also retail investors bought the dip yesterday, so they ended the day with a net balance of $1.3 billion in cash equities, according to J.P. Morgan.
I have no idea what that means. Yes, John, help me here. I mean, Jess is here. My head hurts.
I like JT's got the scarf on.
Oh, you like that? It's my Toulouse-Lautrec look.
We'll have to see. John Tucker, our 201K reporter from New York City. Stay with us. This is Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Just met and holding court here in New York with us. Down south, Alex Steele taking the Sikorsky into BAM Mutual to avoid the congestion tax. Alex Steele and Paul Sweeney joining us right now to drive it forward. What are you guys going to do in the 10 o'clock hour to discuss NVIDIA in this market teetering?
We're going to break it all down for you, Tom. We got some smart folks going to join us here, talk about this market, talk about NVIDIA, talk about the AI trade. We're downtown at the what I call the World Financial Center, which is now Brookfield Place, at the offices of BAM Mutual, Build America Mutual. These are the folks that insure municipal bonds, and we're down at their offices meeting these good folks here today. So we're going to talk about municipal bonds.
Oh, yeah, we are.
Big time.
2 hours, municipal bonds. I'm going to learn a lot of things. My knowledge is not that big, so I'm looking forward to learning a lot about munis. We're going to talk to, in this hour, Peter de Groot. He's head of muni research at J.P. Morgan. We'll talk to him at the top of the next hour. And Tom Doe, founder and CEO of Municipal Market Analytics as well. So we'll learn a lot. We'll also make sure to cover all the news, and earnings are also going crazy, right? GM getting hit pretty hard. You also have Lockheed, you have RTX, so we'll make sure to break all those down as well.
Thank you, Alex Steele and Paul Sweeney. BAM Mutual, look for that here in exactly 4 minutes, 3 seconds. Jess Benton publishing this morning. Were you writing your story during the show?
No. This ran actually before the show.
You wrote this before the show.
So I had
investors to watch Powell's tone.
Yes.
I agree with that. But I think it's a real mystery what we're going to see tomorrow.
Well, also, I mean, when you think about how tight-lipped he tends to be for obvious reasons, and what he was like, say, in between the years 2018, 2019, 2020, obviously before what COVID happened. But I was looking at more so what the options implied moves, moving a little bit higher here, but still under the average over the last year and a half. So option traders betting a 0.8% swing in either direction on Wednesday. That's below the average of 1.1%, according to Piper Sandler of the last 18
Green
months.
on the screen this morning is a generalization, and then we've got a first 28 minutes pullback here, sort of that's wrong, a softness. What do you make on that? I mean, it's just the market choosing, or is it just waiting for the Fed?
Well, also, if you look over what the dollar's doing as well as yield, so the dollar index, if you don't look at the Bloomberg spot index, that's moving higher, as well as you're looking at the 10-year Treasury up just a few basis points, trading at 4.55. So usually when you see some dollar strength as well as yields moving higher, sometimes you can see a little bit of pressure here in the equity market. But when you have NVIDIA, which is when you're thinking about the weighting it has in the S&P 500, that turned lower, and now that actually had been higher in pre-market trading. So when you have that moving lower, and then also we had talked about breadth being better yesterday. Actually, if you use that WEIB function I was talking about earlier,
Paul,
you can see...
The only one I know, Alex Steele and I don't use the WEIB. Sweeney's all over it.
See, I feel like maybe I gave him a heads up about that one. But right now you have around 300 stocks lower, around 200 that are roughly higher. So a little bit of an opposite yesterday, because even though we had the S&P down 1.5% yesterday, you still had around 350 stocks higher.
John Tucker, this is like too much information.
She is like the DeepSeek of Bloomberg.
She is the DeepSeek.
She does it all, and she does it for much fewer dollars, right?
Yes, let's go with
or at least,
maybe
compared to you.
Looking for the next promotion.
DeepSeek. I like that. Yeah. It's like AI. Okay.
But hey, we got a whole team out there. There's 30 of us for the U.S.
Whoa,
equities.
Wait a minute. How many are you?
There's a machine out there, at least 30 of us, for just U.S. equities. So there's.
Are you kidding?
Yeah, no, I'm not kidding at all. So there's like a bunch of me's.
Does that include the interns?
Actually, no. So then if you include the interns as well as the rotators, even more. The rotator program at Bloomberg.
You know how many, our team in the morning? Two.
Who's rotating John Tucker right now?
The guy who sweeps the floor.
We got to get to the end of the show. Jess, this has been a joy. I come back. I have no idea what Sweeney's doing. I don't know. Sweeney may be like, getting the beach house open.
Glad I didn't break anything.
Thank you, Jess Benton, for joining this morning. Paul Sweeney and Alex Steele coming up. Important conversations on taking advantage of tax-free bonds. It's real simple. I got to play Texas music. What do? You play the fabulous Thunderbirds for Jess Benton. Good morning.